And here are your top stories. China providing the least cash to banks since November. Amid signs the economy is rebounding. European and US futures point to higher openings. Goldman Sachs and Morgan Stanley round out US bank earnings this week after JP Morgan and Citigroup benefited from higher interest rates. Meanwhile, Sky reporting that Barclays will cut over 100 investment banking roles. Plus, French President Emmanuel Macron enacts his controversial pension reform after clearing a key constitutional hurdle. He gives a televised speech later today.
So last time, I think he gave an interview. There was controversy about his watch, so we'll see what happens there, Tom. If you look at the futures, as you said, they're pointing to higher start, but actually gains are quite shy, so we'll see how the day pans out.
Yeah, it's a big week for data, of course. We're revising, or at least considering the data that came out from the US on Friday. There were those expectations around inflation picking up in terms of the University of Michigan survey, also weighing up what came out in terms of the retail sales number out of the US. This week, of course, the focus tomorrow, a big data drop for China. That index currently gaining, and we'll unpick the China story for you in a little bit more detail in the minutes ahead. Also looking ahead to data out of the UK and Fed speakers as well before they go into their quiet period. Currently, the FTSE 100 posting gains of 0.3%. There's a solid handoff, particularly from China. Again, as we look ahead to that data tomorrow, the CAC growing over in France, getting 16 points. Over in Spain, upside of 0.2%. Let's switch it on, see how things are shaping up across assets. Again, as markets, when it comes to the Federal Reserve, pretty much fully pricing in now a 25 basis point hike come May. The question is whether June is now back in play for the Fed as the resilience of that economy remains in focus. The CSI 300, just touching on the China story then again, a very solid session, 1.4%. We did have the PBOC pulling back in terms of the amount of liquidity. They pumped additional liquidity into the system, but the lowest levels since November. Again, pointing to their views, arguably, that this is a pretty resilient economy in terms of the rebound that's taking shape in China. The futures in the US looking against a 0.2% after the downside, modest downside that we saw on Friday. The 2 years still comfortably above that 4% level, now at 4.12, just to move 2 basis points. The pound, this is really interesting in terms of the comeback kid that is sterling, 124, with NatWest and Nomura eyeing 130 for the pound. It is the best performing developed market FX so far year to date. Not a lot of movement today, but 124 is the level. Again, NatWest, HSBC eyeing 130 on the pound. Now, let's get to what we've been hearing from ECB President Christine Lagarde, who says she doesn't foresee the US defaulting on its debt, saying such an outcome would have dire consequences around the world.
I have huge confidence in the United States. You know, ever since my year in this country, in this city, in 73, 74, I have had confidence in this country. And I just cannot believe that they would let such a major disaster happen.
Okay, Christine Lagarde speaking there, of course, on the risks around the debt ceiling. Let's bring in Bloomberg's Christine Aquino now. Christine, good morning. The argument from many is that, look, the US will not default on its debt. They will never cross that Rubicon. Some, though, say, look, the politics have changed. What is the risk factor here?
Well, John, that's exactly it. It is the politics that could be the wild card this time around. I mean, this is a drama that we've seen unfold time and time again over the last decade. It's this whole argument over the U.S. debt ceiling between Republicans and Democrats. And I think, you know, you're absolutely right. It is the polarization of those two parties that could potentially push us to the brink yet again. But Interestingly, markets aren't necessarily paying attention to this. I think this is the sort of situation that's kind of a slow boil that's happening in the background. We won't necessarily get kind of that brinksmanship probably until later in the summer toward August. And so I think now it's really just kind of watching for those incremental developments on the politics side to see, is this going to be another round of last minute resolution preceded by, again, like this episode of drama that we've seen unfold time and time again. But as of the moment, it's not particularly a huge worry for markets, just because, as we've seen it before, it was resolved time and time again, and so not particularly something that's on the radar for now.
So, Christine, overall, and we're seeing more and more banknotes on this, that really, no matter what happens with the possibility of a recession, or no matter what happens with monetary policy, it's not really looking that good into the second quarter for stocks.
No, Francine, I think it is a number of different factors, primarily just the idea that we are going to get an economic slowdown in the U.S. and potentially other countries as well. Whether that's a recession or just slower growth remains to be seen. I think there's less of a consensus there, but it is pretty much accepted that things are just going to be slower in the second half of this year, and that definitely will factor into how consumers spend their money. They're probably going to be tightening their belts. Same for businesses. And so I think, especially this earnings season, we're going to hear a lot of refrains from companies just looking forward to less exciting and less positive second half of 2023.
Christine, thank you so much. Christina Aquino there from our Bloomberg MLive team. Now joining us is Charlotte Ryland, co-head of investments at CCLA Investment Management. Charlotte, as always, thanks so much for joining us. When you look at the next couple of quarters, but let's start maybe with the next couple of months, is it all about monetary policy, or it's really earnings going forward and the fact that it's going to be very difficult for them to try and defend their margins?
Yeah, I think, having been last year all been about inflation, it's been about interest rate shocks. This year has been much more about, is the economy going to slow down? How big is that slowdown going to be? And what's the impact going to be on stocks? And I don't think we've fully seen that coming through in the earnings numbers yet. So I think that's definitely what markets are watching at this point.
Okay, so it's not fully priced in yet. What is your current assessment of the shape of any recession as it comes through, and when it comes to the US, the Federal Reserve's response?
Yeah, so I think for us it's probably, as your previous speaker was saying, it's probably going to be as we move into the second half. Certainly all the top-down indicators, things like PMIs, are indicating that things are definitely going to start slowing. The economy's been holding up pretty well so far, and that's probably partly some of those pandemic savings that the consumer had on the background, and obviously the US is really very much driven by the consumer. Employment market's still very healthy, so I think that's been propping things up, but you are beginning to see things beginning to roll over, the housing market rolling over, the impact of some of those interest rate increases coming through on the consumer and also on businesses, of course. So you would expect things to begin to get more difficult in the second half.
So as things get more difficult, how do you play that, Charlotte?
The obvious thing to do is go off and buy defensives, but I think the problem there is if you look at things like some of the staples, some of the pharmaceutical companies, done very well already, probably not looking that attractive. So ironically, it might actually be thinking, look at some of the more growthier areas of the market, which got hit so badly last year. There are, I think, probably still some interesting names to look at there. And possibly also things like healthcare, where, you did have procedure volumes and things coming off last year, possibly a bit of a recovery coming through from those stocks too. So
selective when it comes to some opportunities in growth. We talk about China, we've got the data coming through tomorrow. We've got a bit of liquidity being put into the system, but the lowest level since November. The China impact, the China catalyst across, I think of the L'Oreals of the world, not just the LVMHs, but the Heinekens, the L'Oreals, they're reporting later this week. How important is the Chinese consumer, the China play, going to be to the earnings picture out of Europe?
Yeah, I think for a number of those names, as you say, the luxury complex has already come out with fantastic numbers, partly driven by China. There are companies as well, which have, whether it be restaurant businesses or things like the Diageos or the Pernots, but also have Chinese businesses that will be benefiting. So yeah, as that consumer comes back on track, that should be more helpful.
But Charlotte, and this is something I can't believe I missed those LVMH earnings. It's now the most valuable company.
There was a gaping Francine-sized hole. We've got to have Francine. Let's get her on the line.
Obviously, I'm only a viewer. I don't buy anything. Yeah. Charlotte, when you look at, in general, the strength from China that is actually boosting, is it enough to fill the gap if there's a credit issue, like a big credit crunch in the U.S.?
I think if we genuinely have a credit issue, then I think probably not. And I definitely don't think that's what's in numbers yet. In terms of it's got slowdown, it's definitely not sort of 30-40% is what you'd probably see if we saw a proper credit issue. And equally, China, is coming back on track with the consumer, but it isn't, the kind of infrastructure boom that we saw back in the 2000s, which really drove, world growth.
Do you buy banks at this point?
We wouldn't be particularly enthusiastic about banks. I mean, you've had, the benefit of interest rates moving up and net interest margins. That's now coming under pressure as people begin to move.
Those Friday numbers didn't change that view?
Well, I think what happened on Friday was JP Morgan and others came out and said, we're not in the middle of a credit crisis, and, probably people were short into that. But is that actually sort of, a great picture? If you've got slowing growth, that's not great for credit picture. And if you've got interest rates beginning to peak off, again, that's net interest margins beginning to peak off too, so.
I had one investor say, I only buy banks with a shot of vodka, which kind of summed it up. Maybe not a good idea. 8:08 London time. Charlotte, when you look at, I guess, the next thing to follow, I know there's a lot of talk about commercial real estate, which we really try and follow very closely. Is there going to be a huge problem with that space, and how do you protect yourself?
I mean, clearly the real estate stocks are already priced in to a degree an issue, and that's partly been discount rates moving up. Certainly office is going to be a difficult area. If you're in the wrong offices, subprime, given that people are working from home so much more now, offices are half empty, that's going to be an issue for some of those names. But equally, areas probably like logistic properties, still quite strong demand driven by e-commerce.
Okay, Charlotte Ryland, thank you very much indeed with the insights, of course, as we gear up for a really important week across the earnings front, as we continue to listen out to those Fed officials as well on monetary policy. Charlotte Ryland, co-head of investments at CCLA Investment Management. Now, a corporate story, a stock story, particularly of those of you who are interested in the gaming space. Rovio, of course, based in Helsinki. There is a line crossing, there's a line cross that Sega has agreed to buy the Angry Birds maker for 706 million euros, and of course the stock jumping on the back of that, gaining almost 18% Rovio in the session. Again, this on the back of the news that Sega has offered to buy Rovio Entertainment, which is the parent company, the maker, of course, of the likes of Angry Birds and another host of gaming titles, for around 706 million euros. Not sure if you're an Angry Birds fan, Francis?
I'm not a huge gamer, but actually I remember people making fun of me because I had T-shirts that said Atari. And now it's vintage, and it's really very cool. So, even if you're not a gamer, get the T-shirts.
We need to dust that one off and get that into the studio. All right, coming up, Goldman Sachs. We'll keep across that story for you, by the way, across the hour. Coming up, Goldman Sachs, Morgan Stanley round out US bank earnings this week. Of course, after JP Morgan, Citigroup benefited from higher interest rates. More on that next. This is Bloomberg.
Coming out of World War II into the 1950s, you mentioned that the Fed had imposed yield curve control, basically to finance the wartime deficit. They were trying to move off of that. These are all sort of familiar themes to anyone in 2022, but why was that difficult for them?
Well, so let's get a sense of scale, right? So in 1941, there's about $40 billion worth of treasuries outstanding. In 1945, there's about $240 billion worth of treasuries outstanding. So that's about double the pre-war GDP. If you scale that to 2019 and say, okay, COVID expenditures on the scale of World War II, that's about $40 trillion. And the question is, who's going to buy it? Yeah. And
so what we're dealing with is kind of nothing. We got it.
In that context. And so that's where I guess the analogy breaks down. But it's a very difficult problem, which is who's going to buy the equivalent of $40 trillion today in debt?
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
Welcome to Balance of Power. This is Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
Welcome back to the Open, everyone. We are 13 minutes into the European trading day. Not a huge conviction out there, but still we're seeing gains across the board with the stocks Europe 600 gaining 0.3%. A lot of the action is actually in treasuries, the two-year yield 4.1% on a lot of rate hike wagers, and then also the dollar posting some smaller gains versus some G10 currencies. But again, it's all to do with inflation and central banks and what that means for earnings going forward. Now, so far, the big Wall Street banks and a host of regional U.S. lenders continue the earnings seasons this week. It comes after JP Morgan, Citi, and Wells Fargo posted strong results at the end of last week. Now, for more on all of this, we're joined by Bloomberg's Charlie Wells, or how we call him, Charlie. We've also had, Charlie, some really major banks to report so far. So what are we learning? Not bad at all.
Yes, much better than expected, especially after that incredibly difficult March. I think a sigh of relief in a lot of these C-suites. So when you look at JP Morgan, I mean, their stocks surged on Friday, and we really can thank the likes of net interest income and deposits for coming in rosier than expected for these large mega banks. Now, this week is going to be a little bit different. We're going to get more regional banks reporting. We're going to get the likes of Goldman Sachs reporting with more of an focus there on investment banking, which we know has not been very positive recently.
Charlie, what else are you looking for this week? And is that investment banking component, is that any signs that that's going to come back? Is that where the scrutiny is going to be when it comes to the likes of Goldman?
That's a really good question. I mean, look, when you see the headline that came out recently about Barclays, not on Wall Street, but here in the UK, cutting 100 jobs according to Sky News in its investment banking decision, that really doesn't bode well for the rest of these large banks where deal making really has slowed down. But something interesting, Jamie Dimon said on Friday that the numbers for some of these regional banks might look better than expected, so it may not be quite as bad as expectations certainly have been following March.
And then, Charlie, this is actually a Bloomberg exclusive saying how First Republic's loans to wealthy clients has made it very hard for them to find a rescuer.
This is a really excellent story, especially it really taps into this idea of the struggles that regional banks have had. And so a lot of the focus during that crisis was on underwater bond holdings. But actually, when you look at First Republic, one of the issues that they may face going forward is low interest loan payments. So these are interest-only loans that were made to wealthy borrowers, people who wanted to buy large homes. The deal here was that you could pay, say, 3%, and you didn't have to start paying down that principal for a decade. That's an incredibly sweet deal that really helps build relationships with these super prime borrowers. But when things go bad, as they have at First Republic, that spells trouble because this money is going to come back not for perhaps a decade. And when it comes back, it's going to be at a very low rate, which has made these loans very unattractive for potential borrowers, acquirers, and even the government.
It's a really great story, isn't it? There's some great color about some banking executives, wealthy banking executives snapping up these loans as well of First Republic, some of their rivals and some of the bigger banks as well. And of course, as you say, it makes it really difficult when they've made these commitments. Whoever buys it, if they do buy it, has to commit to those and stick with those. Charlie Wells, always excellent with a preview on the banking earnings later this week and of course what is happening in the travails with First Republic. Let's get now to the Bloomberg Business Flash with Sam Etienne. Sam.
Morning, Tom. Infosys shares have slumped in Mumbai trading following a wave of downgrades after the Indian tech company reported fourth quarter earnings below estimates. At least 10 brokers, including JP Morgan, Macquarie, and Citigroup, slashed their ratings on the stock after the firm said it expects revenue growth of between 4% and 7% in the next fiscal year. Analysts had forecast growth of more than 10%. And Merck is to buy biotech company Prometheus Biosciences for about $10.8 billion. The agreed price is a 75% premium to the target's closing price on Friday. Merck is looking to bolster its research pipeline and strengthen its portfolio of autoimmune drugs as it faces losing a key patent later this decade. And Google is reportedly ramping up its efforts to integrate AI into its search capabilities. The New York Times says it's working on an all-new AI-powered search engine and is also adding AI features to its existing offering. Samsung has reportedly considered swapping Google for Microsoft's Bing as the default search engine on its phones due to Bing's AI features. That's your Bloomberg Business Flash.
Etienne, thanks so much. Sam Etienne in London. Coming up, Europe's earnings season gets underway this week. We'll look at what to expect as some of the region's biggest companies report. That's next, and this is Bloomberg.
We can replicate Tesla. Tesla is a unique because when they found it, and then the personality behind it, the product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but Xpeng is Xpeng. We want to focus on what we think is important for our customers. Our customer like beautifully designed vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Happy Monday. Welcome back to the Open. We are 21 minutes into European trading day. You do have gains now, 0.3% across the European benchmark. Futures in the US also pointing in positive territory. S&P EMI is up 0.2%. Now, equity markets are open across Europe, of course. We continue to keep across those for you. Let's get a check on some of the individual stocks on the move. There's some really interesting stories at play. Joe Easton is here with the details. Joe, what is jumping out to you this morning?
That's right, Tom. Well, those angry birds are flying once again, with Robio jumping around 18% over in Helsinki after the maker of mobile phone games gets a bid from Sega over in Japan. That's trumping a previous bid from Playtika, based in Israel, and sending that stock sharply higher in Finland today. Meanwhile, Capita dropping around 7% after reports in the Daily Telegraph said the company was hit by a Russian cyber attack. A group apparently posted some documents online that were taken from Capita, including sensitive details around bank accounts. That stock not liking that today, down around 7% in London. Meanwhile, one stock jumping in the UK is Network International. That's got a takeover approach from US private equity. They wanted around 400 pence a share. They might only get around 387 according to a statement today, but nonetheless, that stock is very happy about that, up around 20%. Meanwhile, IDS, this is that of Royal Mail, so this is obviously the UK's biggest postal group. They finally made an agreement with the union over pay. They've had some recent strike issues, and that could potentially mean that that now goes to a vote, and that's boosting IDS in London today.
Joe, thank you so much. Bloomberg Equities reporter Joe Easton with also a nice pastel color, getting us ready for the summer months. Europe's earnings season gets into full swing from this week with Heineken, ASML, Nokia, and SAP among those releasing results. Now, investors will also be watching for signs of how companies are coping with headwinds such as higher rates and the banking system stress. So Tim Craighead, our senior European equity strategist at Bloomberg Intelligence, now joins us. He's been crunching the numbers and what we can expect. So what's your overall, Tim, good morning, first of all, what's your overall expectation?
Indeed. Happy Monday. So a couple of things jump out to us. Number one, if you look at overall top line, it actually is going to look okay. Estimate revisions have been negative. I think expectations are relatively muted, but top line close to 5%. A lot of that is driven by banks and financials with higher net interest income, with higher rates being a driver. That said, if you look at earnings, it may be something like -1%, -2%. And there you've got a big drag coming from the commodity complex. Materials, energy in particular, with the drop that we've had in just simply commodity prices, oil, gas, et cetera, playing through into those earnings.
Where's the focus when it comes to some of the big companies and how you tie in some of those overlying issues into the individual stocks that are in focus for us this?
Yeah, well, it's gonna flow week by week for sure. And I think if you zero in on this week, it's interesting because here we've got technology that's big, we've got consumer that's big, and a really interesting little industrial piece that's worth noting. In technology, ASML and SAP are both going to report. You've got the next generation technology with semiconductor manufacturing with ASML that's crucial. Orders will be quite key there. You've got SAP that, yes, it might be cyclically exposed to some of the things that are being such a hit in the U.S., but they've also got strategic transformation opportunities with cloud computing and whatnot. And again, seeing how tech plays out here will be very interesting. On the consumer, I think it's all a case about how big is China. We saw LVMH and Hermes last week that were quite good. L'Oreal, Heineken, both have big Asia businesses. And then last but not least, in industrials, don't forget we've got the Swedes coming. So you've got Sandvik and Volvo, and they've got a finger on the pulse of global economic activity. Again, China being important.
So, Tim, what's been more surprising? You mentioned the tech bounce back, and this is after huge layoffs in the space, and so we watch out for what's happening in Europe. But at the same time, it's also the pattern of reopening that we're seeing in China, which could be a surprise.
Oh, for sure. And look, I think there are a couple of things that play through. One is just simply how much is the consumer there willing to spend? And is it just a high-end thing with luxury goods and they're coming back to traveling a little bit? Or is it more broad-based, which could be more interesting to see with the likes of Heineken or L'Oreal and some others in Asia where we'll get some news on that front. And does it broaden out from the standpoint of industrial activity, which again goes back and plays into those Swedish companies? That's all going to be in sort of a struggle or a battle with what's going on with China and their property market, which all last year was such a negative point of reference. And clearly the government there is trying to back and support a recovery in the real estate sector. So China's going to be
the property market obviously so important for the consumer and how confident they feel. So we continue to listen out for the stampede of the Chinese consumer and the impact on these European equities. Tim Craighead setting us up really nicely for this big earnings week for Europe. Tim Craighead, senior European equity strategist at Bloomberg Intelligence. Now coming up, China dialing back its cash injections as policymakers watch if the economic recovery is on track, as we just kind of touched on there. We're going to get more on that with Bank of America's chief China equity strategist. Really interesting conversation in the setup. And just in the next couple of minutes, Winnie Wu is going to be joining us. This is Bloomberg.
standard way venture firms work is you commit capital, let's say over a 5-year investment period, something like that.
Yeah, exactly. Right.
And then the fund is typically lasts maybe 10 years or so.
15. Well, these days longer. So often 15. Often the tail extends out to 20 years because these companies take a long time to develop.
And somebody that invests in a venture fund today should be trying to get rates of return of 20%, would you say, or more?
You know, top-end venture is sort of 3x net of fees. You know, ideally you're hoping for more than that. You're hoping for 5x or more. You know, you're illiquid the entire time, right? So you'd hope to get paid for the liquidity.
And today,
so yeah, maybe 20 to 40% if things go well is sort of baseline.
Let's take another subject. Let's suppose somebody says, I don't want to invest in Andreessen Horowitz. I want to be Mark Andreessen. How does somebody become a venture capitalist? What are the skill sets for good venture capitalists? There's a high degree of intelligence, hard work, a lot of luck, dress the right part, don't wear a tie. What are the things that make one a good venture capitalist?
So the highly successful VCs historically are very idiosyncratic. You have people from very different backgrounds. Mike Morris is a former newspaper reporter. John Doerr is a former chip salesman. You've got people with very different. Jim Breyer has more of this kind of blue chip investment background. You have people with very different backgrounds and experiences. And so I think it's some set of skills and some set of knowledge, and then there seems to be a taste component to it that's really hard to measure and really hard to predict.
The top names in business are on Bloomberg.
Do you foresee a future where JP Morgan could potentially re-enter the Russian market?
One day, maybe, but it's very possible that won't happen in our lifetime.
Nobody covers business like Bloomberg.
Welcome back to The Open, everyone. 30 minutes into the European trading day, and here are your top stories. China provides the least cash to banks since November amid signs that the economy is rebounding. European stocks and U.S. futures trade higher. Goldman Sachs and Morgan Stanley round up U.S. bank earnings this week after J.P. Morgan and Citigroup benefited from higher interest rates. Meanwhile, Sky reports Barclays will cut over 100 investment banking roles. Plus, French President Emmanuel Macron enacts his controversial pension reform after clearing a constitutional hurdle. He gives a televised speech later today. So if you look at the markets, Tom, for the moment, maybe a lack of conviction, but they're up.
Yeah, maybe a little lack of conviction across equities. The gains are there, though, across the benchmark 0.4%. Where there is conviction, at least building, is that the Fed will go another 25 basis points in May. That's after the data and the investment or inflation survey we got out on Friday. Talking of data, there's going to be a whole load of data out of China tomorrow, data out of the UK as well on the inflation front. It's the expectation from Bloomberg Economics that the BOE can afford to stand pat. Talking of the UK, the FTSE 100 gaining 0.5%. The DAX up 76 points. Across your sectors, let's switch it on. Top of the list, basic resources, 1.5%. It's been a very solid session, by the way, just flicking back to what's happening in Asia, particularly powered by China. We're going to unpack the China short story in just the next couple of seconds. Bottom of the list, two sectors in the red. Technology, you can tie that to the higher yields. You're comfortably above 4% at the front end on US Treasuries, but also financial services as well, down 0.2%. Fran.
Now, China injected the least amount of medium-term cash into the banking system since November, a sign that policymakers are watching the effects of past easing steps as the nation's economic recovery appears to be on track. Well, joining us now is Winnie Wu, Bank of America Securities Chief China Equity Strategist. Winnie, thank you so much for joining us. When you look at the China reopening, and this has taken quite a lot of people by surprise on how fast it's going, and actually, I don't know whether it follows the same pattern of the reopening in the US or Europe, or whether it's different in China.
Yeah, I guess it might be different because after all, China's lockdown has was much more prolonged, right? It was nearly 3 years. And also, I think when China goes to reopening, it was not so much a phased progress. It's very much jumping into reopening. So I would say initially, in the first few months after reopening, November, December, even January, people were still confused. People got sick. People don't know what to do. But confidence started to gradually building up now in the March, April. So we're hoping that this time, even the reopening progress in some areas were slower than expected, but it's more organic, it's more real, and hopefully it can last longer in the coming months.
To that point, Winnie, then, the data is coming through pretty strongly for China, whether it's exports or PMI or indeed the credit impulse as well. How much of that, though, is the reopening noise tied to the reopening? How much of it is actually the trend going forward for China?
Right, that's certainly a very important question and big debate, right? Is that purely pent-up demand, the low base effect, or is that something that can last for longer? And so far, the data are not conclusive yet, right? And there are many important data that hasn't come out, right? The excavator sales, smartphone shipment, FAI, auto sales, those numbers hasn't come out yet. And also there are some weakness in the data being reported, like retail sales in January, February wasn't good enough. And also from the household deposit data, it shows that people are still piling up cash into savings rather than spending investing. So there's mixed signal coming out of the data, but we're certainly hoping that, like I mentioned earlier, these credit data are actually leading indicators to the real economy. And with the quality and volume of credit both improving, it will lead to sequential improvement in the GDP activity data in the coming months and quarters.
And so when you look at the credit data, how many months do you need to see credit rising to actually be confident that this is a good and solid reopening with good economic prospects?
Right, certainly. So usually we look at the multiplier of credit growth over GDP growth, because credit in China is more supply driven, whereas GDP is like demand. So in the credit to GDP multiplier, it was in a recessionary cycle in second half 2021. China over-tightened in late 2021, and the translation into GDP growth is typically 12, 18 months delay. So with the credit multiplier improving in 2022, we should see GDP number accelerating starting from second quarter. And again, continued improvement in the quality of credit growth will also matter a lot. So recently we see more demand from retail household borrowing, which is a very healthy sign.
And you talked the linkages between the consumer, the strength of consumer, the optimism there, and house prices. And house prices, with a terminal shows, they have been ticking up. There's a long way to go still across China, but they have been moving in the right direction.
Yes.
Is that going to be sustained? And when does that unlock the consumer power of China?
Yeah, certainly. So in March, we saw 64 out of the 70 major cities seeing house prices sequentially improving, which is a great sign, right? Because property matters so much in terms of the confidence, the wealth effect, the animal spirit. And if that trend can last, right, if people see that for probably a couple more months to get confirmation that this is not just a one-off pent-up demand, then I think the confidence will really get better. And also on the business side, in the recent spring holiday seasons, we see a lot of long lines outside of the popular restaurant. So probably due to the reduced supply that a lot of restaurant hotels got shut down during COVID. But with the demand coming back, hopefully business confidence will come back as well. Job will be created, income outlook will improve, and that should improve people's confidence on the property market as well. It becomes self-reinforcing positive feedback loop.
Winnie, I was really actually fairly struck by the governor of the PBOC, Gang, who gave quite a rare speech in Washington during the IMF meetings on the sidelines, saying, like, look, they've largely ended currency intervention. You wouldn't really get drawn on when yuan could be freely convertible. But does he give you confidence that actually, things are moving in the right direction?
Yeah, I mean, I think for the past few years, if you look at the exchange rate, it has a correlation between the spread between US dollar treasury yield and China treasury yield. So, with US dollar yield peaking out, and hopefully as China's economy recovers, China's bond yield will start to climb up a bit more. This year, the depreciation pressure for RMB is going to be very limited. In fact, I would say RMB probably already troughed in November last year, according to our house view. So I guess this year, PBOC's need to intervene the currency is less, right? The natural market force said RMB has room to appreciate this year.
You've outlined a picture of kind of relative optimism around China for the months ahead. How do you play that? Do you play that via A shares, H shares, offshore, onshore, and within it, which sectors at this point?
Yeah, sure. So as of now, I think investors are still quite skeptical. So I guess, the way they play is not the big index level, not the ADRs that are driven mainly by fund flow, but we say a couple of things. One is a barbell strategy. So on one side, we think A-share, mid-small cap in the right sector. So for example, green economy related sector, import substitution related sector, these deep tech, renewables, they have the long-term potential because they are well aligned to policy direction and could potentially deliver secular growth. So that's the one side of the barbell. But the other side of the barbell are the SOEs with defensive earnings, cheap valuation, very high dividend yield at 9 to 10%. When index is kind of boring trading sideways, these SOEs are actually very defensive. And the third pillar to that is focusing on earnings, right? So consumer stocks that can beat on the earnings will still be the safe ones to play.
How much do tensions in foreign policy between the U.S. and China actually impact earnings outlook going forward?
I think market expectation on that is already very low, right? Nobody is expecting the relationship to go back to the good old days. All we market want is sort of some stabilization so that people know where are the bottom line, where they can invest, where they can't. And I think, for different parts of the investor base, certain investor will try to avoid the stocks that potentially could be vulnerable to whatever the policy risks, whereas Asia investors or the non-US monies might have a bit more flexibility in terms of really finding the stocks that deliver bottom-up earnings rather than the top-down risks.
Really, really smart analysis. Great to have you on the show. Thank you for coming to the studio. That is Winnie Wu, of course, on the prospects around China. Bank of America Securities Chief China Equity Strategist. We have a redhead. This ties to the China story as well, because we're talking about European stocks and just the relentless resilience of European stocks year to date. And of course, China is a catalyst there. The redhead, European Stocks 50 index, set for its highest close since December of 2007. So that's the Stocks 50 index set for its highest close since December 2007. Across the European Stock 600, you're seeing gains today of 0.4%, Francine. It just continues the upside for these European equities.
Yeah, it's incredible. I mean, again, we've just opened Euro Stoxx 50 because it's only 8:39, yes. But we're looking ahead. And of course, the fact that they could close to the highest since December 2007, what does that mean for valuations? What does that mean for margins and the earnings season?
Okay, coming up, Apple sales in India hit a record $6 billion. That's the CEO, Tim Cook, arrives in the country to open its first local stores. We get the details. This is Bloomberg.
CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
Markets count down in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Welcome back to the Open. 42 minutes into the European trading day. The gains continue across European equities of 0.3% so far in the session. At least futures in the US pointed to gains of 0.2% after the modest losses on Friday. Weighing up, of course, the earnings picture, the data out of the US. We've got a data dump out of China tomorrow. And, of course, the earnings season getting underway in Europe. To what extent is that going to be a catalyst or a drag for these markets? A top corporate story for us this morning, though, and this is really fascinating. Apple, sales in India hitting a new high of almost $6 billion in the year to March, highlighting that market's increased importance for the iPhone maker. This, as CEO Tim Cook arrives in the country this week to open its first local stores. Let's bring in Bloomberg's Alex Webb for the details. Did we expect this number, Alex? How surprising is this? What does it tell us about the opportunities in India for Apple?
I mean, it's certainly a big jump. It was about $4 billion the year earlier, so that's clearly about a 50% increase. It is still a relatively small proportion from the number of handsets they sell in India compared to the total. About 700 million is the total size of the market. They represent about 4% of that number. Now, India has been talked about for a very long time as being sort of the next China. People saying they see India kind of now where China was perhaps 10 years ago. China generates about $25 billion in revenue for Apple, so there's clearly a long runway to go if that's going to be the case. We have seen a massive shift a sizable shift at any rate of manufacturing from China into India. That's partly to take better use of the Indian opportunity, but also to de-risk itself a little bit, and it is only a little bit, from what's happening in China.
Alex, at the other time, and this is, I feel, a huge story, it's been reported that Microsoft's Bing may replace basically the Google search engine as default on Samsung phones and any hardware. I mean, that feels huge.
Yeah, I mean, look, Samsung, they don't make as much money from handsets as Apple do, but they are the best-selling smartphones in the world. That would be quite meaningful for Google that, it still makes a huge amount of money from mobile ads. One has to suspect, they wonder whether there's a little bit of negotiating going on, that actually, often Google pays for the privilege of being on some, particularly on Apple handsets. So is that a part of it? We don't know. This is something reported by the New York Times, that the new AI tools being introduced to Bing, coming from ChatGPT, coming from OpenAI, are making Bing a little bit more appealing. It does herald, perhaps, another step in the increasing search wars.
Alex, thank you so much. Bloomberg's Alex Webb there from, of course, our tech expert, in-house tech expert. Staying on the topic of tech and AI, investors say high school students graduating this year should go into tech rather than finance. There you go. That's the result of this week's Bloomberg MLive Pulse survey, which asked investors which industry graduates should pursue for the best career prospects. Well, Bloomberg's Madison Mills reports.
Forget a degree in finance. Go for a career in tech instead. That's the advice from the latest Bloomberg survey of professional and retail investors. Only 1 in 5 Wall Street professionals say high school seniors graduating this year should follow their footsteps and go into finance. About half say that Gen Z's best bet actually lies in the tech sector, and that's despite all those recent layoffs at companies like Meta, Amazon, and Google. Still, hiring trends paint a rosy picture for those with a background in tech. Industries ranging from auto to the federal government have jumped at the chance to recruit any laid-off tech workers. A degree in tech could set you up for a lot of potential jobs and a safety net if any of those jobs don't quite pan out the way that you'd hoped. Survey respondents also expressed concern about the long-term threat of AI. Think ChatGPT taking all of our jobs. For kids graduating from kindergarten this year, about 40% of investors said to go into healthcare. That way, when they come of age, they may be able to hedge against any potential AI-related job takeovers. Roughly 12% said Wall Street would be the right career given that pending AI threat. The AI concerns come despite traders themselves finding that current iterations of ChatGPT struggle with things like math and corporate earnings. But the idea here is that there's still plenty of time for AI to improve and to potentially threaten our jobs along the way.
Okay, Bloomberg's Madison Mills there on this week's Bloomberg MLive Pulse survey. Let's get the Bloomberg First Word News now with Sam Etienne. Sam.
Morning, Tom. Geopolitical challenges posed by China are in the focus for the G7 foreign ministers meeting in Japan. A senior U.S. Department official told Bloomberg tensions with Beijing are high on the agenda. Japanese Prime Minister Fumio Kishida, meanwhile, resumed election campaigning over the weekend after a smoke bomb was allegedly thrown at an event he attended in central Japan. Kishida was evacuated unharmed from the site. And fears of a full-blown civil war are rising in Sudan as reports suggest violence between the army and a rival paramilitary group is continuing into a third day. The long-simmering dispute erupted on Saturday into a battle for control of the nation. Nearly 100 people are reported to have been killed. And ECB President Christine Lagarde says she doesn't foresee the US defaulting on its debt. In an interview with CBS, Lagarde said she's confident the US will not allow that to happen, as it would have a negative impact globally. The Biden administration is locked in an impasse with Republicans over government borrowing and related spending cuts. That's global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Samuel Etienne, and this is Bloomberg. Tom.
Okay, Sam, thank you very much. Coming up, French President Emmanuel Macron enacts his controversial pension reform in the face of widespread protests. We'll have more on that next. This is Bloomberg.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
Information you want, analysis you trust. Everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Ferro. Weekdays on Bloomberg.
Welcome back to The Open, everyone. 51 minutes into the European trading day. We're getting around 0.3%. I think there's a little bit of a lack of conviction, but still, we're seeing gains across the board. And then we had a really interesting Bloomberg headline saying that actually if we continue along this vein, then the Euro Stoxx 50 actually finishes the day at the highest since December 2007. Now, let's also take a look at some of the key things that markets are watching out for this week. Later this morning, 9 a.m. UK time, we'll get a final reading of Italian CPI. Tomorrow, there are more earnings from the U.S. banks, with Goldman, Bank of America, and regional lenders set to report. We'll also get a host of China data, including GDP, on Wednesday. There's an update on UK inflation, and the Fed Beige Book is released. On Thursday, ECB minutes from its monetary policy meeting in March are published. We'll also get new U.S. initial jobless claims, and then rounding out this week on Friday, we're set to get new PMIs from the U.S., UK, and across Europe. So to France, and the French president, Emmanuel Macron, has enacted his unpopular pension reform after it cleared a constitutional hurdle last week. The law, which raises the minimum retirement age to 64, has sparked widespread protests. Now, the legislation will take effect in September. Joining us now is Bloomberg's Paris bureau chief, Alan Katz. Alan, now that the pension law has been enacted, I mean, how angry are people still in France?
Well, it's a little bit hard to tell, actually. So if you talk to, I would say, sort of the far left then, or the sort of the left-wing unions and far-left politicians, they're very angry. They're going to continue protesting. And the train operator SNCF, 4 unions there have called for a day of anger on Thursday. So if you're coming to France on Thursday, do watch out for your train schedule. But on the other hand, you do have a slight decline in the number of people who support these protests, and most importantly, this morning, the head of the CFDT, which is probably the most moderate union, said that expecting the president to back down at this point would be fooling people, and he's not going to bother trying to do that. So if you start to actually have a bit of a split between the unions, that really does play for Macron and would suggest that maybe he has in fact sort of gotten his way on this topic.
And so on that point, is this a clear-cut victory for Macron? And what is he expected? He's going to be addressing the people of France later today in a television address. What are we expecting to hear from him? And is this a clear victory for the president?
So it's definitely too early to say it's a clear victory for him. It is a victory for him. He did, passing the constitutional muster was a big victory for him. Macron has a tendency, though, to put his foot in his mouth, especially when he addresses the French people. He comes off routinely as either out of touch or arrogant or condescending, and so he could, in fact, sort of turn a victory into a defeat if he speaks really maladroitly tonight. He's certainly going to try not to do that. That's why he's doing it in sort of a format of a speech rather than an interview. But it's too early to say he's definitely in the clear from it. The other thing that you have to remember is that France, like the U.S., has a system where laws take quite some time to actually be put in place. So the law has been enacted, but it won't be applied until September 1st, and there's a sort of a series of technical measures and sort of regulations that have to be put in place between now and then. So there are some chances of blockages between now and then, but more or less, I would say for the moment, he's winning. We'll see tonight after his speech whether or not he manages to accentuate that winning path, or if he, as I said, puts his foot in his mouth and sort of blows things up again.
Alan, I also wanted to ask, your take on, he did this massive trip in China and actually got quite a lot of flack from it from NATO allies because of his stance on Taiwan. Like, how is that playing out domestically?
So it's actually not really much of an issue domestically. It's funny to see the sort of the dichotomy in that between the way people view it internationally and the way people view it here. Here, the focus really has been, and certainly had been last week when he made these comments, on retirement reform, on the problems that he was having domestically, on whether or not this was going to pass the Constitutional Council or not. And there was actually very little discussion about China. When American media specifically started to object to the terms that Macron had used, or his comments on that plane ride, that was only then that sort of French media sort of picked up on, oh, this is an issue and this is something to talk about. So you really have two separate things. You have sort of the French domestic view on what's going on, which really is focused on domestic issues, particularly retirement, and the international view, which is that here's Macron trying to blow stuff up again, and whether or not he's right or wrong to do so. So it's really
interesting in terms of the difference and the split in views for the domestic population versus the international when it comes to those comments on China and Taiwan. Thank you very much indeed. Bloomberg's Paris bureau chief Alan Katz there. Just checking your marks before we let you go. You're seeing gains of 0.2% across European stocks. Futures in the US also pointing higher by 0.2 on the S&P E-minis. That is it for the European Market Open. Surveillance Early Edition is up next. This is Bloomberg.
what do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. Now, what's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I think probably I try and play that role.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is Bloomberg.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here is what's coming up on today's program. China provides the least cash to banks since November, amid signs that the economy is rebounding, while European stocks and U.S. futures trade higher. Goldman Sachs and Morgan Stanley round out U.S. bank earnings this week after J.P. Morgan and Citigroup benefited from higher interest rates. Meanwhile, Sky also reports that Barclays will cut over 100 investment banking roles. Plus, the French President Emmanuel Macron enacts his controversial pension reform after clearing a constitutional hurdle. He gives a televised speech later today. Now, first thing is first, so let's check on the markets. Now, the main story today, and this is the difference between the Euro Stoxx 50 and the Euro Stoxx 600, is that index, the 50, is set for its highest closed since December 2007. Now, this means that the Stoxx 50 has outperformed the 600 by far, with banking stocks actually resuming a bit of a rally following the brief turmoil in March. In terms of points, LVMH, ASML, L'Oréal, SAP, and Hermès have been the biggest gainers in the index, which is up some 16% this year, compared with a 10% for the rise 600. So for the moment, we're seeing a little bit of adjustment for the Euro Stoxx 50, but still, it's very close to that 2007 high. Let's also look at what European countries are doing individually. You can see there's quite a lot of green across the board, with the FTSE leading the gains. Now, Barclays is said to be planning to cut more than 100 roles in its investment banking division. Sky News reports that the job cuts won't be confined to a single country or function within the business. Now, for more on all of this, we're joined by Bloomberg's Charlie Wells. So, Charlie, thank you so much for joining us. What's been prompting these cuts?
Look, so this is not a great way to start Monday morning if you're in the investment banking division at Barclays. Now, what we've been talking about for the past year really has been this slowdown in deal-making activity across Wall Street, across a lot of these Wall Street banks. And just like Barclays, they have been making cuts in their investment banking divisions. Actually, Barclays, less than 6 months ago, made cuts as well. So this is very much in line with the trend that we're seeing. What we know is that these cuts are not necessarily going to be confined to certain countries, to certain roles, but that conversations are going to start this week.
Charlie, at the same time, we've had quite a lot of the big Wall Street banks reporting. What have we been learning?
Look, so sort of a different story there, right? So last Friday, we saw huge, upticks in some areas of some of these banks, setting the bar incredibly high for the banks that are going to be reporting earnings this week. So on Friday, we saw, J.P. Morgan, we saw Citigroup, we saw Wells Fargo showing, really good results as far as net interest income. We saw deposits tick up at J.P. Morgan. There had been concerns that maybe those deposit figures would actually tick down, and so the bar has been set very high.
So, Charlie, at the same time, there's quite a lot of earnings this week. What are we expecting? And then we have some great Bloomberg reporting on some of the smaller U.S. banks.
We certainly do. So there's going to be a lot of these other mega banks reporting. So Bank of America, there are some concerns that they may not perform as well as, say, the likes of JP Morgan as far as net interest income. But of course, we're going to get some like Goldman Sachs reporting, more investment banking activity there. But then, of course, these regional banks. And Bloomberg has this great big take out. It is about interest-only loans made by First Republic. And so a lot of the focus on these regional bank crises has focused on their underwater bond holdings, but this focuses on low interest loans for things like mortgages, where wealthy borrowers could borrow for long amounts of time at low rates and not have to pay back the principal for a while. That's causing trouble at that bank.
Charlie, thanks so much. Charlie Wells there with the very latest on the banks. Now, China has also injected the smallest amount of medium-term cash into the banking system since November, a sign that policymakers are actually watching the effects of past easing. The PBOC offered 170 billion yuan of funds to banks, resulting in a 20 billion yuan net injection for the month of April. Now, for more, let's bring Bloomberg Economics' David Chu. David, so what can we actually read from this in terms of China's economic recovery?
Yes, actually, what we are looking at is tomorrow's data, and we expect a strong rebound in the 1Q GDP. And we forecast a 5.8% year-on-year. So if it hits, that means that China's recovery is on the track. And this time, we have seen the PBOC providing more liquidity to the commercial banks. It means that, in our view, that the PBOC want to continue to support the economic recovery. So that, but on the other hand, the PBOC hold the MLF rate steady this time. And I think the PBOC, yes, it is the overall policy stance is supportive, but the PBOC want to avoid too much stimulus within the short term, which could be, they want to preserve the policy room with this. So anyway, we think that the rebound is ahead, and also we see more support.
So what is happening with deposit rates with some of the smaller Chinese lenders?
Yes, that is actually a quite interesting question that we have seen many of the smaller banks, they are reducing their deposit rate. This means that they are trying to reduce their cost for their liability. I think one of the reasons is that in the lending side, because of the fast expansion of credit lending, actually their interest rate margin has been lower over the past several months. So that this action was, aimed at to reducing their funding costs, so that to keep their margin relatively higher, so that to keep the business going.
All right, thank you so much. David Chu there from our Bloomberg Economics team in Hong Kong. Now let's get straight to the Bloomberg First Word News. Here's Leanne Garrett. Hi, Leanne.
Hi, Francine. Geopolitical challenges posed by China are in focus as G7 foreign ministers meet in Japan. A senior U.S. Defense Department official told Bloomberg tensions with Beijing are high on the agenda. Japanese Prime Minister Fumio Kishida, meanwhile, resumed election campaigning over the weekend after a smoke bomb was allegedly thrown at an event he attended in central Japan. Kishida was evacuated unharmed from the site. Now, fears of a full-blown civil war are rising in Sudan as violence between the army and a rival paramilitary group is continuing into a third day. A long simmering dispute erupted on Saturday into a battle for control of the nation. Nearly 100 people are reported to have now been killed. President Emmanuel Macron has enacted his controversial pension reform after clearing a constitutional hurdle. The move was made possible after France's Constitutional Council approved the core elements of the bill on Friday, despite weeks of protests across the country. The law, which increases the minimum retirement age by 2 years to 64, will take effect in September. ECB President Christine Lagarde says she doesn't foresee the U.S. defaulting on its debt. In an interview with CBS, Lagarde said she is confident the U.S. will not allow that to happen, as it would have a negative impact globally. The Biden administration is locked in an impasse with the Republicans over government borrowing and related spending cuts. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg. Francine.
Leanne, thank you so much. Now, we're just getting some breaking news, and we will, of course, cover the Merck deal very, very closely. Merck buying Prometheus Biosciences for about $10.8 billion to bolster its research pipeline and strengthen its portfolio of autoimmune drugs. And on the back of that pre-market, you can see Prometheus gaining almost 71% on the back of that Merck deal. So we'll have a full roundup of the deal and what it means for the biotech company, one of the largest pharma deals actually in recent history. Coming up, there is a cautious tone in markets today as investors weigh the prospects of more rate hikes and an economic slowdown. We'll have plenty more on that shortly. This is Bloomberg.
Coming out of World War II into the 1950s, you mentioned that the Fed had imposed yield curve control, basically to finance the wartime deficit. They were trying to move off of that. These are all sort of familiar themes to anyone in 2022, but why was that difficult for them?
Well, so let's get a sense of scale, right? So in 1941, there's about $40 billion worth of treasuries outstanding. In 1945, there's about $240 billion worth of treasuries outstanding. So that's about double the pre-war GDP. If you scale that to 2019 and say, okay, COVID expenditures on the scale of World War II, that's about $40 trillion. And the question is, who's going to buy it? Yeah. And
so what we're dealing with is kind of nothing. We got it.
In that context. And so that's where I guess the analogy breaks down. But it's a very difficult problem, which is who's going to buy the equivalent of $40 trillion today in debt?
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking to do.
Are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stenivek bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Friday's outsized reaction to the U.S. retail sales data saw yields rise and the U.S. dollar climb. U.S. retail sales fell for a second month in March, indicating that household spending is cooling. Now, for more, let's bring in our markets reporter, Valerie Teitel. And Valerie, I know you were looking at financial conditions, we're looking at treasuries, but break it down for us.
Yeah, Friday's move, a lot of people are seeing it as an overreaction, but it goes to show just how much the market was positioned for such a weak retail sales number. And when they didn't get it, two-year yields rocketed 14 basis points higher, and the market moved to price in a 25 basis point hike from the Fed in May, and some speculation that they might have to hike again in June. Now, we had this move in the front end. The dollar also strengthened on the back of that, unwinding a lot of its move weaker last week. But if we look to see what we have ahead of us this week in terms of what could possibly shift this yet again, what could possibly make us think that maybe the Fed won't hike in May, we have a few key events which I can show you here on my next graphic. First, we get housing data, some key housing data out Tuesday and Thursday. And then on Wednesday, an important one, it's It's the Fed's Beige Book. Now, this comprises of anecdotal evidence from all of the Fed's 12 districts, hoping we can get some sort of hint on just how much the credit conditions have tightened in the broader financial system. And then on Thursday, we hear from 6 Fed speakers. That's ahead of the blackout period that comes on Saturday. And then the big data dump for the U.S. comes on Friday. We get the PMI data globally, but for the U.S. as well.
6 Fed speakers. Valerie, my head is already spinning. We'll have to keep a very close eye on that. Valerie Teitel there with some of the U.S. data later this week. Now let's bring in the conversation Ian Steely, International Chief Investment Officer for Fixed Income at J.P. Morgan. Ian, great to have you on the program. I mean, there's so much going on. How much is the focus going to be on possible recession, the credit crunch, I guess away from earnings?
I think if you think about what happened over the course of last week, I guess people are coming back towards this view that maybe there's a bit of a musing around soft landing, a bit of excitement around that. The way we look at it, though, is that still believe that as we go through the second half of this year, the credit crunch is going to take effect. The long and cumulative lags of monetary policy tightening is starting to bite. And we'll go through periods like we went through last week where a bit more optimism shows. And I think a lot of people are positioning for the recession. It's quite a consensus view out there. But ultimately, some of the survey data, some of the leading indicators we would look at would indicate that actually we are seeing a slowdown, particularly in the US. Maybe not so much around other parts of the world.
So, Ian, so first of all, what kind of slowdown are we talking about? What kind of credit crunch are we talking about? And where do you see it first?
So we're definitely seeing a tightening in lending standards. And when you look at some of the surveys, the senior loan officer surveys, subcomponents of the NFIB survey last week, a lot of these were also really before a lot of the sort of turmoil in the banking sector over the last few weeks or so. And they were already showing signs that we are starting to see the tightening that's gone through start to bite. I would expect more of that to come through. Is it going to be a really deep recession? I don't think that's the case, because when we look at consumers, when we look at corporations, they're still in pretty robust health at the moment. And also other parts of the world like China are reopening, and there's going to be a bit of a boost from that as well. But I definitely think the direction is towards a slowdown.
So to figure out the severity of the credit crunch, do you look at household spending or do you look at housing?
You look at, well, housing's obviously been the very first indicator to hit. That's very attuned to what goes on in the rate market. It happens very quickly, and then it's going to be more around the household spending. And obviously the latest, or the last part really, the last shoe to drop really is the jobs market and the unemployment picture. And you would expect as the recession really starts to bite, that's when the layoffs start to happen. So that's more of a sort of a lagging indicator. So some of the more forward-looking indicators to us are the credit condition surveys.
I mean, that means a whole more challenges, of course, for policymakers, that they try and figure out what they've done so far together with financial conditions that are tightening quite severely. What are you expecting from the Fed?
I think for the Fed not to go at the next meeting, you'd probably have to see something pretty dramatic happen over the next couple of weeks or so. So expectations from us is that they will go, and I think that's pretty much baked into the market. But it does feel as if, reading the last Fed minutes and listening, I say it'll be interesting to see those 6 Fed speakers come out this week.
I know 6, I'm like...
But it does feel that they're sort of setting us up for that we're done. We're pretty much done, and that they would like to take a pause. I think the bigger question will be the cuts that are now priced in second half of this year and next year. Are they going to be able to be fulfilled?
Are you expecting cuts at the end of the year? I mean, it seems pretty, again, I know we look at treasuries and we look at expectations for the Fed, but we haven't really figured out what inflation does from here.
Yeah, and I think that's the key question from the Fed, because inflation, it's definitely coming down in the US, and I think the readings last week, most people were looking at them as a good reading, and the numbers heading in the right direction. It's just that move from 8 or 9 to 5 is probably quite straightforward. It's that further fall down. What does the Fed believe is good enough? Are they going to be happy with the direction of travel? Do they want to see an actual level? Is 2.5% going to be good enough on their core PCE measure, or do they actually want to see it hit 2? And then they also have to take into account that they know they've just seen over the last few weeks the impact of all the tightening that's happened. It has started to hit other parts of the market. Can they really be blasé about continuing to tighten or leaving rates at elevated levels? And I don't think that's the case. And I think they will start to be thinking about easing policy later this year.
But is it possible to separate what's happening with the banks to what's happening with inflation? Or, the market is putting both at the same time because, of course, one links to the other. And so does the Fed have to do the same?
It does, but ultimately, if what's happening in the broader economy does lead to a slowdown, does lead to a recession, that is going to bring down inflation. And we saw that in the staff forecasts last week. So I think that's what the Fed needs to be focusing on, is what is going to be the impact to the broader economy, because ultimately if it is quite a slowdown, that is going to bring inflation down off its own accord.
So, Ian, do inflows continue into some of the bonds, the fixed income space?
I think so. I mean, it makes perfect sense to us as a fixed income investor. But I think, if you look at, where are the risk rewards? Well, ultimately, yields, yes, they can go a little bit higher, and maybe you get a slightly better entry point. But I still think the directory of travel over the next couple of years is easier policy and lower bond yields, and then you get your yields, you lock them in, and you get some capital gains on the back of that.
So what would you be buying right now? In the US and then elsewhere?
Definitely in the US. When we look around, places like Europe, they've probably still got a bit more to be done.
The boat doesn't look attractive.
They've definitely got some more to be done. But no, I think the US is the place where we're seeing the central bank coming towards the end of what needs to happen. And for us, really, it's the shorter end, the belly of the curve. There's been a lot of volatility in the very front end in the 2-year part. So I'll probably focus on 5 years at the moment from a risk-reward standpoint.
I was surprised actually by the fact, I wasn't really surprised by how China's reopening was affecting some of the stocks, but I was surprised by how we didn't see it coming in certain spaces. How does that read across go to fixed income?
I think it means you probably don't want to be looking at China fixed income at the moment, because the yields there aren't that attractive. I do think when you think, where does China have an impact, it's on the export economies. Europe, as we've just been talking about, or you've just been talking about, so big boost from some of the reopening there. And then the way we've thought about it, at least, is we were expecting this reopening from China, maybe not to be as dramatic as the rest of the world was over the last 18 months or so, but we know what happens when people are allowed out and allowed to do things and allowed to spend money. There is a bit of a boom, and that's going on in China, and we see that in the Chinese data at the moment. Probably not as much of a feed through to the US, though, as it would be to Europe.
Yeah, I mean, after 3 years of lockdown, you would expect something big. Ian, thank you so much for joining us. Ian Steely, their International Chief Investment Officer for Fixed Income at JP Morgan. Coming up, the French President Emmanuel Macron enacts his controversial pension reform in the face of widespread protests. We'll have plenty more on that next, and this is Bloomberg.
We can replicate Tesla. Tesla is a unique because when they found it, and then the personality behind it, the product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but Xpeng is Xpeng. We want to focus on what we think is important for our customers. Our customer like beautifully designed vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different.
Our studios in New York and San Francisco. Our expert hosts have the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business the show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority. This month, Bloomberg brings you the latest from China's 14th Annual National People's Congress, including China's COVID recovery, economic outlook, and geopolitical tensions. Continuing coverage this week on Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Now, the French President Emmanuel Macron has enacted his unpopular pension reform after it cleared a constitutional hurdle last week. The law, which raises the minimum retirement age to 64, has sparked widespread protest. Now, legislation will take effect in September. Joining us now is Bloomberg's Paris Bureau Chief. He's Alan Katz. Alan, great to see you on the show again. So now that the pension law has been enacted, is it all over?
Well, that's a good question. So it seems like at least the unified front of union protests is likely over except for one day, which is May 1st. They've all planned to have a big mass movement on May 1st, which is Labor Day in most of Europe. And so it's a traditional day for union workers to protest. You don't strike that day because it's a holiday here in France and in much of Europe. Whether or not they agree beyond that, it seems less likely. The head of one of the more moderate unions, the CFDT, Laurent Berger, today and actually for a week now, has been saying that he can't see himself, pushing for strikes for the next 6 months. So it seems like at least that union, which is the largest one in France, is going to be unlikely to continue to protest against this. Instead, they're going to try to sort of work on the margins, on the details in terms of the actual application of this law to try to improve it in some ways for their workers.
So, Alan, we were looking at pictures of Emmanuel Macron's last TV interview, which kind of went down as a bullet. I think it was a bit of a PR disaster for him. Today, he's speaking on French TV again. What's he expected to say?
So he's likely to do two things. One, to say that, he somehow will try to present some form of empathy with the French, though he's really not very good at that. And as you point out in previous interviews, that's really gone down terribly. And the second thing he's going to try to do is say, actually, we have all these other things that we need to do. And he's sort of going to try to turn the page on retirement reform and say, we have all these other projects, and I want, to work together on all these things. But it's what he does every time, pretty much, and it really tends to fall on deaf ears because it really does it minimizes objections to retirement reform and to the concerns that people have about it, and so there's at least a decent chance that he will again sort of put his foot in his mouth and really anger the French people rather than sort of bring them together.
Thank you so much, Bloomberg's Paris Bureau Chief, Alan Katz. Now, coming up, as tech giants ramp up their R&D on artificial intelligence, we look at the implications for the future of employment. That's coming up next, and this is Bloomberg.
Was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
DOJ or other authorities
could face bigger challenges. Britain's next.
Was going to keep rain World Cup.
This is a 3. As the economic picture does.
The OK is getting ready to make a decision.
China provides the least cash to banks since November amid signs that the economy is rebounding. European stocks and U.S. futures trade higher. Goldman Sachs and Morgan Stanley round out U.S. bank earnings this week after J.P. Morgan and Citigroup benefited from higher interest rates. Meanwhile, Sky reports Barclays will cut over 100 investment banking roles. Plus, French President Emmanuel Macron enacts a controversial pension reform after clearing a constitutional hurdle. He gives a televised speech later today. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, despite recent layoffs and economic headwinds, graduating high school students will be best off pursuing a career in tech rather than finance. At least that's a result of this week's Bloomberg MLive Pulse survey. Now, we asked investors which industry graduates should enter for the best career prospects given the rise of AI. I think we'll have a full roundup of what we found out on that. Now, our guest today is a serial entrepreneur who aspires to make creating apps as simple as ordering pizza. Welcome, Sachin Dev-Dugal, Chief Executive and co-founder of Builder.ai. Sachin, first of all, explain to us exactly what, I mean, when you look at what you've built, this is, I want to create an app to simplify your life, or in some cases, maybe make your life harder, but I have AI helping me in doing that, so I can do an app faster. Is it better necessarily?
You know, I think there's a couple of things. Today, every business around the world, every entrepreneur that's trying to build an idea needs software and to unlock their potential. It's no longer possible now for you to be able to do things the old way. But most of us don't know how to build software. Most of us don't know how to get it into the wild. Most of us don't know how to run it. What we found was that most software applications had the same features. But in fact, we were reinventing every single time. The second was that most people, if you gave them tools and say, go do it yourself, most people can't use Excel. No. So they're not going to build application software, whether it's web or mobile themselves. And so the power of using AI here is that we can actually help fill in the gaps of what someone needs, help put it together, and ship it out faster than if they were trying to do it themselves.
But Sachin, when you look at, for example, you know, Bill Gates versus Elon Musk, I mean, one thinks AI is like the death and destruction of civilization. The other one says, look, there's so many opportunities. Like, do we fully understand how AI will change our societies, change the way we live and work?
You know, I honestly think we haven't quite grappled it yet. You know, you have to sort of take a view of where AI is today. It's like the AOL of the internet days. We're really early, despite us thinking LLMs are the things that you talk about on the tube. And
you don't talk about it on the tube?
I think the way to look at it is think about AI today, and the stage of maturity is a young child. When a young child is born, the parents' responsibility is to instill values. Yeah. Values help a child create rules, good, bad, ugly. Yeah. Today, what you've got is a child that has worldwide access to information, some hard rules, but no value system. And so you've got like a generous set of issues that could come out unless we get ahead of this.
But governments are trying to curtail it. Do governments actually understand what they're dealing with? Again, AI is constantly evolving. We don't exactly know where it ends up, and it could be transformative for everything, even how we Google search everything at all, so how we find websites, how we interact with human beings every day.
And I think that's the key point, right? It's where you're using it. And so you've got sort of like the orders of risk. There's national security. You obviously do not want to be using it there. You've got things that affect your population. For example, like we were talking earlier on, right? Imagine a small country like Oman is using educational software powered by LLMs. But if that LLM data is using global data sets, it may be teaching things to kids that are not national views, but are more global views. And parents may not want that, for example. No. And then you've got things like, can you help me build a presentation? Or could you please generate a picture of Morocco at night? And I think for those things, it's vastly powerful. And so really, it's about the right use case being used at the right time.
Who's regulating it correctly? Because there's also, so many fakes. Everybody remembers the puffer jacket that the Pope wore, which is a deep fake. I think there was also things online about Berlusconi funeral, which was fake, but that looked really real.
The deep fakes piece is where you sort of enter being able to affect a population, national security, and I think today it's not being regulated. But one thing to keep in mind is how are these deep fakes being percolated into society? They're through the social media distribution networks, right? So whether it's a Twitter, an Instagram, a Facebook, potentially through search, but mainly through the more mass social media. And so I think this is where governments and social media companies need to work much closer together to instill checking at the boundary. We've never had a situation in history where such prolific content can be created, where it's virtually impossible to distill to the human eye whether it's genuine or not. It's a little like what happened to diamonds.
Yeah.
CVDs versus real diamonds. You needed a lab to realize it was synthetic.
But who's that lab?
I think it's a great question, and I think it's something that governments need to do because it affects their people. I don't think I think there can be a central body within an apex organization like the United Nations or organizations such, but I really think it's a national issue. And more so because these algorithms are being developed in other parts of the world. Data is being tagged in other parts of the world, and the population is being affected somewhere else.
Yeah. Do we need a new technology minister for each government? Because it's almost, I used to be told you look on boards, if you don't have a chief technology officer that sits on the board, then you lose, like you might as well close shop. Is it the same thing for government?
I think that's a spot on view, right? And the question is this a political role or a civil service role, right? Yeah. To me, this needs to be a non-politicized role because the ramifications are so high. It's more of a civil service role where there's continuity between governments.
I feel like we also underestimate the fact that machine learning changes with the kind of hardware that we input, right? The microprocessors and things like that. How fast? So let's say governments stand back and don't actually do anything to curtail it. How fast will AI develop into something else from what we have today?
I think it's a fabulous question with not a straight answer, because if you see what's happening with quantum computing, that will accelerate it at a phenomenal pace. But we're still quite early in quantum computing. But even if we look at modern GPU chipsets and how they're processing data, it's blistering speed. So I don't think there is any cap on how fast it can grow out. I think the sensibilities need to kick in now to make sure it does it at the right pace.
Yeah. So when you look at privacy, when you look at morality, how do you build your AI so that anyone who can have a website protects, for example, data privacy? In Europe, we have GDPR and things like that.
For us in how we build software, we don't touch the end customer's data. So one of the things that we took as a decision really early on is each application. Suppose you were building something for
pizza delivery.
Pizza delivery, right?
Pizza delivery.
We actually have a customer that's doing that right now. Your data would sit within a segregated account, which only you can see. So we wouldn't use that data to make decisions for the next pizza person coming in. That being said, all systems are learning from conversations that they're having with their customers to make those customer conversations more enriched.
I mean, I need to sort out my apps because I have like 350 apps, it feels like, and I can't really find them. When you speak to your customers, why build your own app instead of going on Deliveroo? Apart from the money factor, are we going to have too many apps? Like, how many are you expecting to make with Build Your AI?
So I think the very nature of software is changing. Yeah. Today, you think about software applications, we think about them hanging on your phone for 6 months a year. Yeah. In the next few years, this conversation could have software augmenting it. And as soon as we're off the camera, the software disappears.
Holograms? What are we talking about?
We're talking about software that could be in a desk, software that could be speaking into your ear. It's all software.
Deliver pizzas live as we talk about.
Well, not even necessarily
apps?
deliver pizzas, but it could just be to augment the conversation. And then, it's software being created at the speed of thought, software being destroyed at the speed of thought.
But Sasha, how do you augment our conversation right now? I mean, we're having a great conversation. What's AI going to help us? Is it the interaction with the viewer, or how does that change?
It could be the interaction with the viewer. It could be, we may be talking about, for example, Oman, and then suddenly data comes in saying what kind of systems are being used, how's the population. It's enriching the conversation. It's allowing us to keep a memory of the conversation, the things that we discussed, taking captured moments out of it. And that's really powerful. But, going back to your question around the 300 odd apps you have, what we've seen is there are about 20 apps that people use.
Yep.
The top 5 are global social media type apps. The next 5 are airlines.
Yes.
But the next 10 are local. And the bottom 5 are hyper-local. Your salon, your favorite Lebanese restaurant, your grocery store that's nearby. And you're never going to see that change, because the minute you go to local, every local is different.
Sachin, thanks so much. I'm going to delete my 258 apps, because it's true. I mean, I do only probably use about 10. Sachin Devdugal, their chief executive and co-founder of Builder.ai. Now, coming up, UK inflation is expected to slip back into single digits this week. We'll have all of the details next, and this is Bloomberg. What do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. Now, what's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I think probably I try and play that role.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Now, looking ahead to later this week, UK inflation is expected to slip back into single digits, raising hopes that rate hikes from the BOE may be coming to an end. Now, for more, let's bring in Bloomberg's markets managing editor, Christine Aquino. So, Christine, thank you so much for joining us. Why are economists now expecting a slowdown in UK inflation?
Well, Francine, I think we've seen more signs of disinflation in the UK economy in general. If you look at some of the PMI surveys, we're seeing reports of businesses saying that they have lower prices paid, a little bit of less food inflation as well from some of the supermarket surveys that we've seen over the last few weeks. And so, and wages, of course, contributing to that as well. well a bit of a pause in wage gains there. So I think overall there is much hope that we're finally going to go down to those single-digit numbers that the government, for instance, has been very eager to see. Although we've been down this road before, so let's wait until later this week until we actually have the data to call it.
I feel like we've been asking so many times, can inflation go as fast as it came? And people say, no, you're crazy. But talk to me about the pound.
Well, the pound has been really having such a good run this year. It is the best performing group of 10 currencies so far, which you couldn't imagine saying if we were, just rewinding back to 6 months ago when we were still kind of picking up the pieces left by former Prime Minister Liz Truss's administration. But here we are. And a lot of factors contribute to that, of course. There is the dollar weakness story that we've seen ever since the start of this year, and really starting from toward the end of last year. That's really helped the pound. And then there's also a sense that the UK is avoiding at least the worst case scenario when it comes to growth, right? We're not seeing as many recession calls anymore. In fact, Bloomberg Economics, our economists there are saying that growth will remain flat. It's at least not going to go into recession. And so there is this feeling that at least we're not going to hit that ultimate growth slowdown scenario that many were fearing at the end of last year.
So what about the BOE deposit guarantees?
Yeah, well, this is, of course, very much a legacy of what we've seen in terms of the banking sector gyrations in March, right? And the BOE very much involved in that via HSBC's takeover of SVB's UK branch. But I think in general, it's also led them to kind of reevaluate the protections for deposits that we currently have in place. It's not very high. It's £85,000, which is way less than what we have in the US, which is $250,000. And so I think it's a good time. They're looking at it as a way to kind of reevaluate, given what we've seen in March, and potentially guarding deposits in case we saw a repeat, or we see a repeat of the turmoil from March and heading into later this year. Because you never know. This is the sort of thing that can be calm for a while up until it's not.
Yeah,
exactly.
Calm until it's not. Christine, thank you so much. Bloomberg's Markets Managing Editor, Christine Aquino. Now, we'll be covering all things UK every week on Thursdays at 9:30 a.m. London time in our half-an-hour special. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Sega has offered to buy Rovio Entertainment in a deal that values the creator of Angry Birds at about 706 million euros. The Finnish company's board has unanimously recommended shareholders accept the offer, which is backed by 49% of shareholders. Japan's Sega is doubling down on console and smartphone gaming as it seeks new ways to grow. Infosys shares have slumped in Mumbai trading following a wave of downgrades after the Indian tech company reported fourth quarter earnings below estimates. At least 10 brokers, including JP Morgan, Macquarie and Citigroup, slashed their ratings on the stock after the firm said it expects revenue growth of between 4% and 7% in the next fiscal year. Analysts had forecast growth of more than 10%. And Google is reportedly ramping up efforts to integrate AI into search capabilities. The New York Times says it's working on an all-new AI-powered search engine and also adding AI features to its existing offering. Samsung has reportedly considered swapping Google for Microsoft Bing as a default search engine on its phones, and that's due to Bing's AI features. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg. Francine.
Leanne, thank you so much. Now, pharma giant Merck is buying Prometheus Biosciences for about $10.8 billion, one of the largest pharma deals in recent history. It will bolster Merck's research pipeline and strengthen its portfolio of autoimmune drugs. Now, it will also cushion the loss of its patent for blockbuster cancer drug Keytruda. Now, for more on all of this, Sam Fazeli, Director of Pharma Research, EMEA at Bloomberg Intelligence, joins us. Sam, good morning. Thank you so much for joining us. Does this help Merck with its big generic exposure?
Good morning, Francine. Well, yes, I think it will go some way to chip away at that issue, which is starts in 2028. That drug Keytruda that you mentioned already, it's been a phenomenal cancer drug, not just for the sales that it's generating for Merck, but also for patients. It's basically treats something 15, 16 different indications. So expectations are, based on consensus, that it would be about $33 billion in 2028, about 40% of Merck's overall sales. So they need to do something. And here we've got something being done It's a very interesting drug that they're acquiring through this company, but it won't be the end because it's unlikely to come to market before 2026. So it's not really going to have enough time to deal with that patent expiration.
So how exciting is the drug that Merck is acquiring through this deal?
Yeah, so it's a completely novel mechanism to treat two different facets of inflammatory bowel disease, so ulcerative colitis and Crohn's disease. And it has shown in phase 2 trials, in a pretty decent phase 2 trial, that it's got a efficacy that's above and beyond what's been seen before with other agents. The problem Merck will have, of course, when they bring this to market is that another staple drug in this disease, although lower efficacy, is going off patent also, and that's Johnson & Johnson's Stelara. So that dynamic will be quite interesting to watch.
So, Sam, give me a sense of, does this spur more acquisitions? I mean, this was one of the most transformative. I mean, it's a huge, huge, sizable M&A. Are we going to see more of that kind of thing?
I think so. Because, as you saw, some research that we did a few weeks back suggests that up to about $390 billion worth of drugs are going to be exposed to generics. That's not the revenue that the companies will lose, but exposed to generics potentially by 2030, between 2023 and 2030. That's a big number to deal with. That's almost close to half of total branded pharma sales potentially by 2030, if not quite exactly half. So pharma companies are going to need to keep doing this, and they're doing it. The ones who've got the capability are doing it.
Sam, thank you so much. Sam Fazeli, the Director of Pharma Research, EMEA at Bloomberg Intelligence. And then look at that, Prometheus gaining very significantly in today's trading session. Now, coming up as earnings season kicks off, we'll get a deep dive into what we should be watching out for. We'll discuss the likes of ASML, L'Oreal, and Heineken. That's coming up shortly, and this is Bloomberg.
Out of World War II into the 1950s, you mentioned that the Fed had imposed yield curve control, basically to finance the wartime deficit. They were trying to move off of that. These are all sort of familiar themes to anyone in 2022, but why was that difficult for them?
Well, so let's get a sense of scale, right? So in 1941, there's about $40 billion worth of treasuries outstanding. In 1945, there's about $240 billion worth of treasuries outstanding. So that's about double the pre-war GDP. If you scale that to 2019 and say, okay, COVID expenditures on the scale of World War II, that's about $40 trillion. And the question is, who's going to buy it? Yeah. And
so what we're dealing with is kind of nothing. We got it.
In that context. And so that's where I guess the analogy breaks down. But it's a very difficult problem, which is who's going to buy the equivalent of $40 trillion today in debt?
Why do the biggest names in business choose Bloomberg?
That is a great question. question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Now, Europe's earnings season gets into full swings from this week with Heineken, ASML, Nokia, and SAP among those releasing results. Now, investors will be watching for signs of how companies are coping with headwinds such as higher rates and the banking system stress. Well, we're delighted to be joined now by Tim Craighead, Senior European Equity Strategist at Bloomberg Intelligence. Tim, I love all of your research. Well done. It talks about, the upcoming earnings season, who will do well, who will do badly. So what's your overall expectation?
So overall, I think it's going to be a tale of sector. There's some that will show very good earnings. There's others that are going to be under a lot of pressure. For example, if you look at the overall earnings picture, it's shaping up to be a 1 or 2% decline in earnings for this quarter. Now, on the one hand, we've got banks that with higher interest rates, you've got higher net interest margins, improving profitability, quite positive. On the other hand, you've got lower year-on-year energy and metals prices, and you've got a significant drag with the commodity complex. So, that minus 1 or 2% overall is got a big skew in both directions.
So what are we talking about? Margin? I mean, is there one factor that you're looking out for more than most? And we want to talk about technology and, of course, the fact that they laid off so many people. I don't know how that will do.
Yeah, so I think in terms of the themes or the issues to consider, one is going to be what happens with China, and whether it's the industrials, whether it's the consumer, whether it's some of the commodity complex in terms of demand. The reopening of China is quite important from the standpoint of driving global growth, but also providing another leg of growth, because many of these companies, think the consumer space, for example, are facing tough year-on-year comparisons because Europe and the U.S. reopened last year first quarter. So it's an interesting dynamic there. So China is a big deal. Yeah. Commercial real estate is another big deal as it relates to the financial sector. We're all focused on banks last month with the stress that you had mentioned. But another one of those issues with higher interest rates is commercial property, which, you think, who's coming back to office? Do companies want to revamp their workspace, et cetera? And what's happening with those values of office buildings, and how does that play through the financial sector is going to be a big deal, as we see from companies report this quarter.
So is that going to be the biggest source of stress?
I think it is a big potential source of stress. We would argue that the deposit issue that came up a few weeks back with SVB and Credit Suisse is probably one-off. But it's one of many issues that when you have such a spike in interest rates, that you do have to look for other implications that can ramble through, and this is a big one.
Tim, thank you so much. As always, Tim Craighead, their Senior European Equity Strategist at Bloomberg Intelligence, with some great piece of research that we'll also push it on social media. But if you're a Bloomberg Terminal user, and we hope you are, just check out Tim and his team's, of course, research. Now, this is a picture overall for some of these indices in Europe. Now, we're holding on to gains, but maybe without the conviction that we were hoping for, expecting earlier today. Now, this is a couple of things that we need to watch out for. First of all, the Euro area blue chip index, which is the Euro Stoxx 50, finally set for its highest close since the global financial crisis. I don't think it's as gaining as much as it was about 15 or 20 minutes ago, but still, the gauge got a lift last week as luxury stocks rallied amid some upbeat sales. And then Prometheus, this is a company bought by Merck. Shares are jumping quite significantly after that deal, gaining some 70%. Bloomberg Surveillance Early Edition continues in the next hour with Anna Edwards in London, Kriti Gupta in New York. This is Bloomberg.
Paul Jacobson assured me that when he takes the new Hummer EV on long journeys, it's not just fun to drive, it's equipped to go the distance.
I hear so much about road trip anxiety that I wanted to experience it myself. My family likes to drive a lot, so I brought my daughter home from college in this, and it was great. I mean, the computer system is all intuitive. It tells you how to keep track of the battery. It tells you where the charging stations are. It tells you how much power you'll have when you get to the charging station. So it really puts a lot of your anxiety at ease. But as far as driving it, it's a treat.
So where are you on the charging stations? I know General Motors has made an investment in one company. How are we doing in this country generally in getting charging stations in?
So I think this is an area where obviously we can continue to improve as a country and a society. We're doing our best. We've committed almost $1 billion to EV charging. So we've taken that and looked at home charging solutions, local community solutions, and road trip charging solutions. With my daughter, what we would end up doing is probably stopping, grabbing a bite to eat, plugging it into a charger, usually a high-speed charger, to get as much charge as we can, and being there for 20 to 30 minutes. Get us a lot of range, and by the time we've used that range, we're tired, ready to stop again, etc. So it was a really good experience for me, and it's taught me, number one, what are the concerns of the consumer that are ultimately going to drive our vehicles, and then number two, where do we need to focus on addressing some of those anxious points for people.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, China Open.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
I think the whole narrative of economic policy making and who runs the show today has changed.
Central banks have to own their mistakes and have to learn from their mistakes.
I don't see inflation as on a secure path down, so I think the Fed has very difficult choices ahead of it.
Inflation is going to come down quite a bit on its own, but it will not come down to 3%.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards and Matt Miller.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. The week begins with an $11 billion pharma deal. Merck is buying Prometheus in a bid to bolster its research pipeline and strengthen its portfolio of autoimmune drugs. Apple sales in India near $6 billion. CEO Tim Cook begins his retail push there as the country takes over some production from China. And a survey of economists suggests the UK is heading for a pause on rates as inflation is expected to slip back into single digits this week. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London. Kriti Gupta is with me in New York. Matt Miller is off today. And Kriti, a little bit of M&A news in the pharma sector, as we said in our headlines, also elsewhere here in Europe. That's lifting spirits in some places, but we have to wait a little bit longer for data and Fed speak. That really hits later in the week.
Yeah, a little lack of conviction here, lack of momentum, even as we kick off the week with, as you say, that merger mania news. On the macro front, though, a little bit quieter than expected. Analysts, take a look at futures, for example, only higher by 0.1%. Yes, risk sentiment might be a little bit more positive, but still, again, not something that you can really kind of dive both feet in with. The two-year yield is what's catching my attention, though. 4.11 on the front end of the curve. Remember, one of the big issues of the past couple of weeks for the really bond bears out there was that the two-year yield kept hitting up against that 4% level. Then cue that retail sales data that came in pretty declining for the second straight month, and that actually shot the yield up much, much higher. The idea here simply being that inflation may actually be just a little bit more persistent persistent than we thought. And for that reason, you could see the Federal Reserve continue to hike or even just keep their rates higher for longer. The terminal rate projections in the Fed swaps going up much, much higher. And that keeping that two-year yield firmly above 4%. Does it stay there is the question, though. Right now, only seeing a move about 1 basis point higher. The Bloomberg Dollar Index taking its cue from the yield picture, higher by about 0.2%. Again, no major conviction even in the FX market. But I got to say, the gold story continues to fascinate me. We are on record high watch. We're at 2010 on spot gold. Anna, 2060 is the all-time high.
Nice macro roundup there then, Chrissy. In terms of where we are on the European equity space, broadly positive, only slightly though. A little bit earlier on, it looked as if the Euro Stoxx 50 index might take out those highs that we haven't seen since 2007. Yes, in 2023, we're still comparing back to highs of 2007 on the Euro Stoxx 50, long after the Nasdaq took out those levels and the S&P and even the Stoxx 600. Something to watch, but perhaps we won't take out those levels today by the close as things have faded just a little bit. That's what we see in the overall picture then. Flat to positive for European stocks. One sector that's really in focus is around technology, and actually we're seeing some pullback on tech names here in Europe. ASML is a focus here, but the sector as a whole, and in particular the chip making or the equipment makers that supply the chip makers, those are very much in focus. This after reports out of Taipei that suggest that perhaps TSMC might want to dial back on capex. That is certainly having an impact on some of the shares in that sector, as you see here. And here's Rovio Entertainment. Do you remember Angry Birds? If you've got an even longer memory, you might remember some of the properties owned by Sega. Well, Sega is buying Rovio, which is the maker of Angry Birds, and so as a result, the stock is up by 17.8%. Here's a bit more M&A for you. John Wood Group is going to engage with a bid from Apollo, so they're going to open up and provide more information to private equity bidders, Apollo, and so that's adding to the likelihood that a deal will be done there, because Apollo has been trying to buy that business for a long time. And the pound is at 123.81. I just put this one in on the macro front, Chrissy, because we do get some data out from the UK in terms of jobs and inflation, as we mentioned in our headlines. All of that due this week.
Yeah, and a ripple effect back into the dollar as well, something we're going to be keeping an eye on. So that's what you've got on the macro front. But as we mentioned at the top of the show, it's all about the micro, specifically the merger mania. Merck is buying Prometheus for almost $11 billion, one of the largest pharma deals in recent history. It's going to bolster Merck's research pipeline and strengthen its portfolio of autoimmune drugs, also cushioning the loss of his patent for blockbuster cancer drug Keytruda. For more, Sam Fazeli joins us, senior pharma analyst over at Bloomberg Intelligence. Sam, walk us through how this helps with generic exposure.
Yeah, good morning. 2028 is the year where this phenomenal drug that Merck has created, not just obviously for sales, consensus expects $33 billion in 2028, but also for patients. It's been a major improvement in cancer therapy. So we've got this drug that's going off patent. Consensus expects about $17 billion, $17.5 billion total revenue loss for this drug and a couple of others between 2023 and 2030 for Merck. So they need to fill that gap up. And this is one step toward that. We've called it a chip away at it rather than the solution. We don't think that the drug that comes with this acquisition is going to be on the market before 2026. So it's going to take some time, and it will have its own dynamics to deal with.
Okay, so chipping away at their own expiry cliff then, Sam. But in terms of the drugs that they're buying with this deal, you've suggested you're not entirely sure they're that exciting, but how exciting could they be?
Yeah, the drugs are exciting. There's no question about that. But this is a disease area. In this particular case, it's inflammatory bowel disease, which comes in two flavors, ulcerative colitis or Crohn's disease. This drug has shown the best efficacy that's been seen for this disease ever. Obviously, that's not a head-to-head comparison. It's in separate trials. The issue is it won't be till 2026 that it's on the market. It will take some time to gain market share, etc. And they'll be having to deal with Stelara, which is a big drug currently on the market for this indication from Johnson & Johnson, which would have gone off patent. So it might still mean that people would be taking those cheaper drugs before their transition to this drug. We'll have to see how that dynamic works out.
Sam, thanks very much. Sam Fazeli of Bloomberg Intelligence with a heads up on the M&A that we're seeing in the drug space and what it means. Let's pivot to other corporate news. Apple sales in India hit a new high of almost $6 billion in the year to March, highlighting the market's increased importance to the iPhone maker. This as CEO Tim Cook arrives in the country to open its first local stores this week. Let's bring in Bloomberg's Alex Webb for more. And Alex, good morning to you. So did we expect this record number? I am actually quite surprised we don't have Apple stores trials in India already, given the tech-savvy nature of the country, but this is where the development is.
Yes, no, there's been talk for years that India is maybe 10 years behind China. That's maybe starting to come to fruition now. Like, these sales, they pale in comparison to the 25-odd billion that Apple does in sales in India. The challenge Apple has when it comes to opening its own stores is you have to have a certain proportion of the stock in own brand stores sourced from India itself. Now, it hasn't necessarily opened factories in India in order that it can open stores in India. That's actually more to do with trying to de-risk its China exposure a little bit. But having manufacturing in India does then make it easier to open those stores. And we do often see that where they have retail outlets, it does drive an uplift also in online sales, because people go in, get their hands on it, try it, see a bit of the experience, and then they come back later online and buy the devices.
And of course, we know that in India, Apple is not the main player. Samsung is, as it is with a lot of the emerging markets. Alex, let's pivot from Apple to Netflix, if we will. I'm not sure if you're a Love is Blind fan, but certainly a live stream failure for Netflix that has completely taken over the internet. Walk us through what exactly happened.
I am not a Love is Blind fan, but my wife is, so it does get played in my house more than I would care to admit. Look, this was supposed to be a big sort of Sunday night event. One of the real bastions of linear TV continues to be that Sunday night viewing when families, not to invoke too much of a cliche, sit around the TV and watch some of that event television. This was a real...
invoke that cliche. I'm sure they do it for Surveillance's early edition as well.
They dared forward trying to go for that, right, by getting this live broadcast of Love is Blind. There were huge technical failures. That people tried to get online. Netflix, they couldn't access it. It's a real sort of moment of embarrassment for Netflix. This is a real headline show for them. It is instead going to be available sometime today to watch in catch-up. They'd advertised the ability to ask live questions to some of the participants in the reunion. Obviously, that didn't happen. So, look, is it going to be a massive blow to Netflix's earnings? No. Is it a little bit of embarrassment? Absolutely.
Okay, thanks very much, Alex. Bloomberg's Alex Webb with the latest on a number of tech themes this morning. Let's get back to macro news. And UK Prime Minister Rishi Sunak is expected to receive a boost this week as inflation slips back into single digits, raising hopes that the quickest series of interest rate increases in 3 decades in the UK could be coming to an end. Our UK correspondent Lizzie Burden has an early heads up on the latest for us. Lizzie, what is driving the expected slowdown in inflation?
Well, Anna, it's a mix of petrol prices and core goods inflation. And in the next set of data, economists are expecting an even bigger drop. So, as you say, it'll be back into single digits, they reckon, for the first time since August. It's good news for the Prime Minister. Of course, he's staked his reputation on his top 5 priorities, one of them being halving inflation by the end of the year. The bad news is it's ironically going to take away some of the support that the pound has enjoyed recently. We also get the jobs data tomorrow. That's expected to show a slowdown in pay growth, so that will too feed into the inflation print.
Lizzie, then translate that on to what it means when it comes to expectations for the Bank of England here.
Well, it takes away some of the pressure for the Bank of England to hike again, but markets and economists are split on what Threadneedle Street is going to do next. Economists reckon that they're done with the hikes, but markets reckon you've got 50 basis points worth of hikes by September and more than an 80% chance of another hike at the May meeting. So too is the committee split. You've got at the hawkish end Catherine Mann, at the dovish end Silvana Tenreiro. She was saying in Washington last week that previous jumbo hikes have yet to fully take hold. And in the middle, you've got the chief economist Hugh Pill. He said last week there's scope to do too much, but there's also scope to do too little. So ING says all of this data that we're getting this week is going to be make or break for the May meeting.
Yeah, stuck between a rock and a hard place. Not a great time to envy being a central banker. Bloomberg's Lizzie Burden, we thank you as always. That's the macro front, the global story. Let's bring it back down to the micro here stateside as we get ready for another trading session in the U.S. stock market. We talked about the M&A news. We talked about the tech news. Now let's talk about the financials news, because remember, bank earnings are still continuing. It's not just the big banks that matter, it's the regional ones that matter as well. Charles Schwab, for example, reporting after the bell here. You're already seeing a little bit of optimism baked into the shares, higher by about 2%. Does that continue continue with some of its peers. That's something we're going to be watching throughout the week. Remember, Thursday is going to be the big day for all of the regional banks across the country. I also want to get a quick check on the cryptocurrency stocks here because, look, crypto is moving this morning, but you're seeing a bigger move in some of the players, the way to play kind of crypto, the miners specifically. Marathon Digital down about 4%. Riot really taking it on the chin, down about 5.5%. What's interesting here is that it's magnified more in the stocks, more so than it is in the actual cryptocurrency itself. So that's going to be something to watch. Is this an overreaction? Does this get paired into the opening bells, Anna?
Okay, a lot of things to keep an eye on then as we get towards the open in the US. Coming up, back on the macro then, Christian Kopp joins us. Chrissy, Union Investment Head of Fixed Income, as we get further and further away from the financial services market turmoil that we saw in the month of March. How robust are fixed income markets right now? We'll discuss that. And we'll also talk to Sandra Horsfield, Investec economist, who'll be with us to talk about her view on the world. What have we learned about credit conditions on both sides of the Atlantic of late? What does China have to say? We'll get data from China in tomorrow's trading session. Plus, the future of work. We asked investors which industry offers the best career opportunity. We will bring you the results ahead. This is Bloomberg.
What's the best investment advice you've ever been given by anybody? The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful. In your observation of investors, what do you think is the biggest mistake that average investors make? Selling at the wrong time. And they sell when the prices go down? Yes. Or yes. Not keeping, look, people have conviction, or they invest for if they invest for the right reasons, just keep at it.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Anna Edwards in London. Matt Miller is off, and he's missing a pretty big turnaround story. He knows that I'm obsessed with FX, Anna, and he's missing what's a really interesting chart here. Now, don't worry. Don't let all the colors throw you off. What's important to keep in mind here is that hedge funds are now looking at the dollar as a positive, somewhere to invest. And this is really important as we talk about the last couple of weeks where you start to see a major weakness in the dollar, mostly in favor of the euro. So I think we looked at 110 at the euro closing in last week. Now you're starting to see a lot of the smart money essentially say, look, we don't want to go all in on the dollar. And that makes sense when you are talking about the end of the kind of Fed rate hiking cycle. That's going to turn around, though, if you start to say, well, okay, inflation is persistent. Maybe we stay there. So essentially what this chart is showing you is that now hedge funds getting a lot more bullish on the dollar, changing their tune a little bit, and not necessarily investing in emerging market currencies or other areas of the world where central bankers are remaining very hawkish. Those interest rate differentials are no longer attractive. And they're saying, look, we are going to go all in on the greenback. And that's really where you see this kind of decline in positioning. But there are ripple effects for that kind of talk. Eddie Vanderwall, Bloomberg Markets markets editor, joins us here right on the show. Eddie, talk us through some of those ripple effects. What else gets affected?
Yeah, absolutely. I think there has been a little bit of an unwinding of that extreme bearish position against the dollar. But I think some of that can be quite easily explained, right? I think the Fed's priorities has been laid out for us very clearly. I think their top priority is financial stability. Second priority, inflation. And third only is growth. Now, if we take those in reverse, we have seen that growth is slowing a little bit in the US. But at the same time, inflation remains hot and the banks are looking a lot more stable. And that means that the Fed is probably, even if they only deliver another 25 basis points of hikes, it's less certain that they will deliver cuts later in the year. And I think that's the reason why a lot of investors are turning a little bit more bullish on the dollar.
Yeah, interesting one to watch, certainly, given how far we've traveled up and down in the Bloomberg dollar story. Eddie, good morning. Let me ask you about the UK currency, the pound. It's been a bit of a standout performer, perhaps to the surprise of some people.
I think so.
And then we're going to get some inflation data, jobs market data, a lot to come this week.
Yeah, absolutely. There's a lot to guess here, but because I think the market's pricing another 50 basis points or so from the Bank of England, which is more than the Fed, but less than from the ECB. And I think there's a lot of scope for surprise because the UK economy has, we've seen a turnaround. The pound remains cheap versus the long-term average of where it's been. And again, it's just a little bit of that unwinding of the extreme bearishness. But if we see that inflation coming in hot yet again, later on this week, then I think the Bank of England may just be forced into hiking as much as the ECB, and that therefore we see more upside on the pound.
And of course, the survey of economists suggests that inflation is going to come down back into single digits. But we thought that last time around, didn't we? We were wrong-footed.
Right, and look, and the pound will help. The stronger pound will definitely help on that front. So if we continue to see this strong pound, that makes our imports cheaper, and that will help the Bank of England in bringing inflation down. So hopefully, let's see.
Eddie, thanks very much. Eddie van der Veld of Bloomberg Markets Live with reflections on the dollar and some of the data out that could influence the pound this week. For more market analysis, check out MLIV Go. That's the function to use on the Bloomberg terminal. That's where you find the Markets Live blog. This is Bloomberg.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
markets count down in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Anna Edwards in London. Matt Miller is off today. Now keeping you up to date with news from around the world, here's the first word. Gunfire and explosions rocked the Sudanese capital for a third day as diplomats intensified efforts to stop clashes between the army and a paramilitary group from escalating into a full-blown civil war. A long-simmering dispute erupted this past weekend into a battle for control of the nation. Nearly 100 people are reported to have been killed. Japanese Prime Minister Fumio Kishida resumed election campaigning over the weekend after a smoke bomb was allegedly thrown at an event he attended in central Japan. Kishida was evacuated unharmed from the site, and a 24-year-old man is said to have been arrested. The attack comes just weeks before Kishida is set to host the Group of 7 world leaders for a summit. President Emmanuel Macron has enacted his controversial pension reform after clearing a constitutional hurdle. The move was made possible after France's Constitutional Council approved the core elements of the bill on Friday, despite weeks of protests across the country. The law, which increases the minimum retirement age by 2 years to 64, will take effect in September. ECB President Christine Lagarde says she doesn't foresee the U.S. defaulting on its debt. In an interview with CBS, Lagarde says she's confident the U.S. will not allow that to happen, saying it would have a negative impact globally. The Biden administration is locked at an impasse with the Republicans over government borrowing and related spending cuts. Another sign of mounting pressure on the banking industry, Barclays is responding to a slowdown in deal-making and capital markets businesses by cutting about 100 roles in its investment banking group. The London-based lender already let go of roughly 200 positions from the same division in November. And this is a story that has quite literally gone global as we talk about layoffs on Wall Street following the layoffs that you're seeing in the tech space. I wonder what is next.
Yeah, absolutely. And this is all to do with the investment banking part of Barclays, and that taps into a rich theme, doesn't it? Job losses from investment banking parts of the financial services universe. But Kriti, it's interesting to think about this on the day when we actually have quite a lot of M&A news flow. So we covered that pharma story in our headlines. We also talked about Rovio and the oil services business that is Wood Group. When I was looking at some of the European movers earlier on, we just got a red headline across the Bloomberg that says THG, which is an online retailer based in the UK, not enormous, but still, saying that it got an indicative proposal from Apollo. So private equity interest in some of these businesses. Might that be enough as we put the turmoil of March behind us? Might this kind of news flow be enough to spark some life back into those M&A desks once again over at global investment banks?
Yeah, it's a very good point. But remember, M&A desk is only one part of that business. The other piece of it is debt and equity issuance. And with extremely high rates, there is this kind of discouragement almost baked into the market of actually accessing some of those capital markets. So you're seeing a little bit of a catch-22 almost, where even though there is more M&A activity, there is more deal activity, perhaps a sign of consolidation ahead of what a lot of people are fearing a recession is around the corner. On the other hand, you don't want to access those capital markets.
Right, and the outlook for rates then is going to be crucial, and expectations around recession tie into that, of course. We'll talk about all of that with our next guest then, Chrissy, coming up on the programme. Christian Kopf joins us, Union Investments head of fixed income. After the turmoil of March, what does he think is the picture now for fixed income markets? Where does that leave Christian and his assessment of fixed income and where the opportunities are? Also, FX, he'll weigh in on where we are on euro-dollar. We went above 110 once again last week. Today, we're just below that, 109.74. So we'll We'll get his views on the euro. Just how long can the ECB keep hiking if we do see a pause from the Fed? That seems like an important conversation to have in the FX and rates context. We'll continue to focus on those macro things, all the M&A news of the morning as well. We'll bring you an update shortly. We'll get back to the markets in our next conversation. This is Bloomberg.
Every art institution I know of wants you to serve on their board, and you're very involved in the art world. What is it about art that attracts you?
Well, art is essential in a democracy, David. Art is so important. We know what art does to young people. We know that exposure to art brings about higher levels of empathy. It helps people understand how other cultures, other people live, and it just brings out the kind of humanity in all of us. There are times when I have observed leaders use language that is inhumane while talking about other human beings, while talking about the world. And I think to myself, this person has clearly never engaged in beautiful poetry. They've never listened to the words of a great playwright. They've never sat and reflected on a beautiful painting or picture. Because if they had been really educated, had they really been exposed to the arts, they wouldn't find it possible to use this kind of language.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. The week begins with an $11 billion pharma deal. Merck is buying Prometheus in a bid to bolster its research pipeline and strengthen its portfolio of autoimmune drugs. Apple sales in India near $6 billion. CEO Tim Cook begins his retail push there as the country takes over some production from China. And a survey of economists suggests the UK is heading for a pause on rates as inflation is expected to slip back into single digits this week. I'm Anna Edwards in London with Kriti Gupta in New York. Matt Miller is off today. And Kriti, we have some M&A to talk about today, and we have some news out of the financial services sector. Certainly that's a focus, the earnings story last week and this week. But in terms of the data, that builds from tomorrow onwards, doesn't it? And then we get Fed speakers aplenty come Thursday.
And for that exact reason, you're seeing a lot of investors, even in the pre-market on Monday morning, amid all of that news, news, sitting on the sidelines a little bit. And I think a great way to look at that is not just in the stock market, it's in the bond market, it's in the FX market. You are seeing it everywhere, that really lack of momentum. And that's going to be crucial as we simply talk about the futures action. Again, virtually unchanged, only higher by about 0.1%, the two-year yield at 4.11. And again, only higher by 1 basis point. For me, the bond market is extremely important right now because that two-year yield hasn't been above 4% for weeks, if not about a month or so. So that is going to be significant to see if it can actually stay up there and how it really relates to the Fed swaps and what they're pricing in for hikes throughout the summer. Remember, consensus right now has one more hike in May from the Federal Reserve of 25 basis points, but should the data support it, you could get more and then create a more repricing, and it kind of feels like we're starting to see a little bit of that on the front end of the curve. The Bloomberg Dollar Index taking its cue from the bond market higher by about 0.2%, and gold, of course, we are on that record high watch at about 2060. We're at 2010 right now, getting closer and closer. Let's get to some pre-market movers, though, because, Anna, you mentioned that M&A news. Prometheus is, of course, higher by 70% after Merck is talking about that $11 billion deal, really to amplify some of its portfolio. This is really important for biotech in an age post-COVID where they are looking to do more and more. We're going to dive into that throughout the hours on Bloomberg Television and Radio. Charles Schwab as well. You mentioned those bank earnings. We heard from JP Morgan, Citi, and Wells Fargo on Friday. We're going to hear from a lot of the regional banks this week. Charles Schwab reporting after the bell today, higher by 2.3%. A little bit of optimism baked into those shares. There's no optimism right now, though, in cryptocurrency stocks, and that's really where you're seeing a lot of the pain. More pain in the stocks than in the actual Bitcoin trading itself. Marathon Digital and Riot both down about 4 to 5% in the session, Anna.
Okay, so the crypto space in focus, along with some of the themes around banking and beyond. M&A, of course, a feature. M&A certainly a feature here in Europe as well, then, Chrissy. But we don't see great moves on European equity markets as a result. The M&A story is coming at the smaller end of the market cap scale. So the Stocks Europe 600 up by 0.1%. Some positivity at the start of this year around the luxury sector, the banking sector, tested during March, but coming back fairly strongly, and back to those themes. ASML, though, a poster child today for the technology sector, which is really on the back foot today. Technology under pressure. This is, we saw some headlines coming out of Taipei earlier on. Other media reporting that perhaps TSMC might want to dial back its capital expenditure intentions. As a result, that weighs on the companies that supply the chip makers, the likes of ASML. We've also got that M&A in focus then. Rovio Entertainment, if you remember Angry Birds, and maybe you have an even longer memory and you remember Sonic the Hedgehog, then you might be interested to know that Sega is bidding for the maker of Angry Birds, which is Rovio Entertainment. And so that company based in Finland goes up by 17% and more. John Wood Group, this is also an M&A story. Nothing concluded here, though. This is an oil services business based in Scotland. They've been approached by Apollo a number of times to try and do a deal. Now they've said they are going to work with Apollo. They'll open their data room to Apollo, so they'll get some further access. So that increases the chances that we might see some M&A there. Chrissy.
You know, I was never really into Angry Birds, Anna, I've got to say. Just not my cup of tea, if you will. I wonder if our next guest is Christian Koff, head of fixed income at Union Investment. He's going to keep us on track here. I wonder if he's into Angry Birds. It's fine. We'll ask him in the commercial break. For now, I want to ask him about this fixed income market. We're looking at a two-year yield that is sustainably above 4%. And I'm wondering how much of that actually prices in the banking turmoil, or does it still have some ways to go?
Hey, Kriti. So look, I'm more into Happy Birds, I have to say. I'm not that much into Angry Birds. The two-year rate at about 4% is pricing in another 25 basis points in rate hikes. In fact, what we look at is the June 2023 Fed funds future, and that is trading at 5.05. So in a way, what we've seen here is the rate hikes have been priced out because of the banking turmoil, and now they've been priced back in. But we're not back to square one. Remember that in March, that June 2023 Fed funds future was actually trading at 5.5% yield. So what the market is pricing here is a terminal rate for the Fed, which is slightly lower than what we had prior to the banking crisis. And we actually think that this is justified.
So what does that then mean for a bond market if we do indeed get more persistent inflation, at least stateside or even in Europe as well? What does that mean for a bond market in terms of how quickly the repricing can happen? Are you at all concerned about the volatility we've seen in the last few weeks and whether this bond market can handle that?
You know, I think apart from inflation, we really have to focus on activity here. And in that respect, I think the interview that Janet Yellen gave over the weekend is quite remarkable. She mentioned that we do see credit tightening. There is a risk of a credit crunch, not just in the US, but also in the euro area. And that means that potentially central banks will have to do less less rate hikes. This is also the main reason why, the market implied terminal rate for the Fed is now below the levels we've seen back in March. So we are relatively laid back, I would say, and even sanguine on the outlook on the bond market here. We have seen a repricing now that was necessary because the banking sector turmoil is not as bad as people made it to be. But going forward, we really think that we're getting very close to the end of the rate hiking cycle. Personally, we see another 2 rate hikes by the Fed, not just 1, but 2. But still, that would bring us to the end of the rate hiking cycle pretty soon. And that is good news for the bond markets, also good news to some extent for the equity market.
How do you factor in, good morning to you, Christian, how do you factor in what we've seen on financial conditions of late? I'm looking at a Bloomberg index, but other indices seem to paint, or indexes seem to paint the same picture, that during March, when we saw that tension in the financial services sector, we saw a real tightening in financial conditions, but now we've unwound that tightening, nearly all of it. And so I just wonder where that leaves us when we think about provision of credit to the markets.
Yeah, that's an excellent point, Anna. Those Bloomberg financial condition indices and the other financial condition indices which are out there have been calibrated in a period which was like 10, 15 years ago. And they look at the pricing of credit and the pricing of rates and obviously the pricing of the equity market. They don't really look at the supply, at the decisions made by the treasurers of the banks. And we are facing a situation here where we have seen a large amount of outflows of deposits from US banks. US banks are just not moving up their deposit rates to the market levels. There's a wide gap between what you can get on a 2-year T-bill and what you can get on a savings account or even on a certificate of deposit in the US bank. Because of that, deposits are leaving the US banking system, and they're also leaving, to some extent, the European banking system. And as a result of that, I think the treasurers of the banks will be quite reluctant to extend large amounts of credits. So you don't see that in the financial conditions index, but if you look at the senior loan officer surveys, for example, you can see that there will be some credit tightening, and that should make the central banks quite cautious in hiking rates again. So I wouldn't really focus that much on the financial conditions indices here. I would look at what are the banks doing.
Okay, yes, that very important point you make there, and some colleagues on the Markets Live blog told me something very similar earlier, that it's about those loan surveys and focusing on those. I wonder what you make of the European rate tightening cycle here, Christian, at this point then, given that we are either at the top or very near the top of the Fed tightening cycle, but Europe seems to still have some way to go. How much further can the ECB tighten after the Fed has stopped, after the Fed has paused? Do you see any tensions in that strategy?
Yes. So we think the ECB will do another 75 basis points of rate hikes, taking the deposit rate to 3.75%. And the situation we have here right now is kind of funny, because typically Europe is a very colorful continent where you have all sorts of debates, people contradicting themselves in the ECB Governing Council meetings and in the public. They're throwing media stories at one another, and you always get a very wide variety of views on what central banks should be doing, while in the US it's much more uniform. This time around it's actually the other way around. You see that there is a broad consensus within the ECB Governing Council that they need to continue to hike rates, while in the US there's more of a debate going on here. We have people like the Reserve Bank of Chicago who are calling for a more cautious approach. You have Janet Yellen calling for a more cautious approach. So I think that actually we are moving to a situation where the ECB will keep on hiking rates while the Fed has already reached its terminal rate. And that means that the euro could move higher.
Well, speaking of the euro, let's bring it back and talk about the dollar very quickly. Are you at all concerned about kind of the bear case for the dollar here, if indeed you just laid out the euro piece of the equation, but the fact that hedge funds are piling in for a bullish view of the dollar, what would undermine that?
Well, I think the short-term positioning is actually on the other side. There is a lot of spec demand for the euro here. Now, we have 2 factors here which weigh on the dollar. The first one is the interest rate differentials. We will very soon move in a situation where the ECB will likely continue to hike rates while the Fed stops, which is positive for euro. And then you've got these more structural stories. The governor of the People's Bank of China speaking about a greater role for the renminbi, President Lula of Brazil speaking about invoicing in other currencies than the dollar. You've got Saudi Arabia, which is considering to do some oil trading, which is not denominated in dollars. So there is a very slow-moving process here of people moving away from the dollar. And that's more of a structural story, which also tends to weigh a little bit on the dollar. But in the short run, what really weighs on the dollar is the interest rate differential.
Okay, Christian, thanks very much. Thanks for joining us. Christian Kopf of Union Investment. Really good to get your perspective. We'll continue some of these conversations. We'll be joined next by Sandra Horsfield, Investec economist. We'll get her perspective on the global economy. This is Bloomberg.
As governments, we have a responsibility to create the incentives and the space for you to flourish, a receptive environment for change, and the accountability that comes with guardianship. In many nations, the foundation for this approach has been laid for us long ago if we choose to listen. Where I come from, Aotearoa, New Zealand, a beautiful place you must visit, our Indigenous people hold a worldview that every single living and non-living thing is connected. Our people, our plants, our animals, descendants of Ranganui, the Sky Father, and Papatuanuku, the Earth Mother, and their children. And so it follows that people and nature are kin, are family. And we must care for one another in the spirit of kaitiakitanga, which translates into guardianship by the people of the land for the next generation.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta in New York. Matt Miller is off today. Now, this week, the latest UK unemployment and inflation data releases will be closely watched amid a finely balanced debate on whether the Bank of England is done with raising rates. Joining us now is Sandra Horsfield, economist at Investec. Sandra, good morning to you. We thought that we might get a drop down in inflation last month, and everyone, including the Bank of England, was surprised by the fact that we didn't. What are you watching for in particular in the inflation readings and the other UK data this week?
I think on the inflation side, clearly the expectation is that this time we will get another step down back into single digits on the annual inflation rate. What's behind that? First of all, petrol prices. We know those fell quite a bit on the month and their base effects from the rise in the previous year. On top of that, the goods side of inflation does now seem to be sustainably turning lower. If you look at the supply chain disruption story, which was such a big part of inflation initially in driving up, that has now reversed. Shipping costs have fallen very sharply. Supply chain disruptions more generally have eased, and that ought to help pull down the annual rate.
Okay, and so we watch services and see whether that also gets pulled down. And what does all of this mean for the Bank of England then? As I was suggesting, there is this debate as to whether we've seen the peak rate, yes or not.
I mean, it's very difficult to be satisfied with an inflation rate that's still going to be close to 10%, if not quite above it, from the Bank of England's perspective. We think that at the same time, a tightening in credit conditions of some sort is likely to be coming, and that in itself slows the economy. Plus, we have the sort of line of sight of low inflation coming through energy prices coming down, and that should help core inflation too. Core inflation also has elements of energy in there, and so that ought to pull down prices. We think we'll get one more rate hike in May, but then perhaps that's the peak rate as far as we're concerned.
So, Sandra, that's the monetary side of the equation. Now, for our global audience, factor in the fiscal policy. Anything from Rishi Sunak and his administration that could now factor into the UK economy? Anything on your radar there?
I think it's quite clear what the government is trying to get to. It would like to be in a position to, ahead of the next election, be able to reduce taxation and sort of make good on those sides of hopes and promises within the Conservative Party. At the same time, we're dealing with very strong spending pressures still. We are still dealing with strikes in the economy. What will that mean in terms of, will there have to be more money put on the table to help, say, the nurses' strikes, the doctors' strikes? And what sort of fiscal headroom does that give? We were quite limited in terms of the amount of spending that could come. So perhaps the sort of general fiscal backdrop is still a difficult one in the UK and perhaps more difficult than in other places.
Sandra, can I ask you, you mentioned the strike activity, and not to delve, as an economist, I'm sure you don't want to delve into the politics around any of that, but in terms of the economics, which you must be seeing in the data, there are arguments from the government side that they can't pay any more to the public sector because it would be inflationary, but then every time we get data about the economy, there is a hit described to the economy as a result of strike activity. As an economist, do you get a sense of where how the strike activity is affecting the UK economy right now?
Clearly, right now, the initial impact is a short-term one. If nurses can't work, they can't produce the health output that they would otherwise have been. So the economy has stagnated rather than sort of improving more, as you see in some of the surveys. At the same time, if you're looking ahead, without resolving this, we have less money in people's pockets, and therefore the spending power isn't there. So resolving this issue will have to be quite important. Also for health, we know that the labour market is impacted by the drawbacks, by the long lines of delays in the NHS. So if that's impacted by strikes and that's strung out even further, perhaps the potential of the economy to grow is also impacted.
Sandra, you mentioned spending power there. I want to look at that through the lens of FX if we can. I believe out of last week, the IMF spring meetings and World Bank spring meetings last week, the consensus was that it was going to take the UK far longer to get out of any sort of recessionary period than its G10 counterparts. How does that factor into spending ability internationally for Brits?
Certainly, it has been an important fact that the UK economy has underperformed recently in terms of activity, and we don't have the room to support the economy in the way through short-term measures on the fiscal side that we had beforehand. We know that there's more of a slowdown coming. Indeed, that sort of the fiscal picture for years to come is likely to be a drag on the economy, and that will hold back activity going forward in the UK. So overall, in terms of spending power, the picture isn't looking as healthy as elsewhere. So a slow recovery is the most likely outcome.
On the global dynamics, the next sort of big data set comes out of China tomorrow morning. We're going to get an update on a suite of data there. How are you looking at the China story, the sort of the resilience or the rebound that we've seen, since the COVID lockdowns? That's clearly having an impact in some sectors, but maybe not doing as well as some thought in others. Where are you on China?
I guess it's a mixed story. On the one hand, we have signs that the global economy doing better has helped Chinese trade and exports, and that's an important part of the story. We had very strong trade numbers last week, so that gives some hopes for the GDP numbers having held up quite well. At the same time, the housing market is still an issue. Yes, we had a couple of months where the house prices have actually increased in China again, and that's a positive. But on the whole, to resolve the issues that are going on in that sector will probably still be a protracted affair that will drag down.
Sandra, I'm glad you mentioned the China piece. Let's talk about the U.S. piece. I believe the U.S. is the largest trading partner for the U.K. at the moment. And looking to talk a little bit more when it comes to trade in particular, what do those conversations look like? How do they factor into your view?
The trade discussions are always difficult ones that take a long time to make headway. We've seen lots of trade negotiations on a much smaller scale. I think ultimately the general sentiment is for an improvement in relations internationally. We've seen protocols, the Northern Ireland Protocol being now superseded by the Windsor Framework, and that's set a much more positive tone to relations between the US and the UK. And perhaps that will carry on in terms of trade figures and trade negotiations. And further down the line, that could help bring some longer-term benefits. Of course, that's a very big long-term prize. It's not something that will be resolved over time and help the UK economy to perform very strongly in the near term.
Sandra, thank you very much. Thanks for joining us. Sandra Horsfield of Investec with thoughts on the global economy and specifically around the UK. Coming up, the future of work. We asked investors which industry offers the best career opportunities. They gave some interesting insights. We'll bring you the results next. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He called himself self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot. You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
A lot's happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
A lot of these areas still have very, very good valuations.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot.
We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Anna Edwards in London. Matt Miller is off today. Let's take a look at what's going on ahead this week. U.S. bank earnings continue to roll in with Goldman Sachs, Bank of America, and Morgan Stanley reporting alongside some of the regional banks. Big tech earnings also underway. Netflix and Tesla due to deliver results. Economic data as well in focus from China in Asia this week. We get first quarter GDP, retail sales, fixed asset investment, and industrial production numbers for March. A lot to chew on there. And stateside, we'll hear from a slew of Fed speakers, including Michelle Bowman, John Williams, Austin Goolsbee, and Raphael Bostic. Anna, it is going to be a very intense week, I think, starting tomorrow.
Yeah, absolutely. Yeah, this is a slightly quieter, has a slightly quieter feel to it, doesn't it? We sit here with US futures not doing a whole lot of anything this morning. So a good time to mention our Markets Live Pulse survey this week, Chrissy, which makes a fascinating read. It's proving popular on the terminal as well. The survey focus is on the future of work, and it's a survey of investors, and investors were asked where they think that the young people of today will find careers in the future. And investors say that high school students graduating this year should go into tech rather than into finance, which is where they operate. But it's interesting if you go further down the age spectrum, for today's kindergartners, is that a word? That very young people anyway, AI is seen as a threat to both career paths, and that actually they suggest careers in healthcare might be the future. And I had a really interesting conversation about AI earlier on. We spoke to Daniel Susskind of Oxford University. He's an author, and he's talked about the future of work and a future without work. And he says it really is going to be different this time. AI is not going to be a complementary force to the labour market. It is going to be something that starts to replace people's jobs, and a world without work, apparently that's a negative, just to clarify, because I wasn't entirely sure, having first picked up the book.
Yeah, I mean, well, it's already turning into a little bit of a negative, right? ChatGPT, for example, as a journalist, really quickly made the circles around here saying, look, what if ChatGPT replaces the need for reporters? So in 20 years, it's pretty clear that those little people, the kindergartners, are certainly going to be disrupted. It's interesting. Encouraging healthcare reminds me of those parents who said, well, we want you to be a doctor, so we're going to buy you your very first doctor set at age 4. Feels like that's what's getting encouraged here.
Okay, yeah, absolutely. And there's a lot of talk about empathy and whether that is the skill of the future. And so maybe we'll focus on that in future shows. That is it for early edition. Surveillance is up ahead. They'll be sure to bring you all of the latest moves in the markets, or the lack of movement in markets. To Kriti's point, some of the data comes later on this week. We get China data, as she was saying, tomorrow. Then we get more US data and a lot of Fed speakers as we get towards the end of the week. So we'll continue to bring you all of that news flow. This is Bloomberg.
Chris, can I ask my landlord for a rent cut in the next couple months? Like, is that reasonable?
Well, I guess it depends when you signed your lease, Joe. It sounds like you got kind of one of those pandemic deals that, you know, particularly in New York City, where rents actually fell really sharply in that first year of the pandemic. So we are really seeing the market having turned a corner a little bit over these past few months. Prices have been coming down for 4 straight months now in our national rent index. But, you know, if you're still paying that late 2020 level, then you might not necessarily be eligible for a discount at this point.
Good point. All right, I have another question, which is like, so I have 2 kids, but unlike other people, I actually am cool and I don't want to move to the suburbs. Like, I want to.
This episode is just Joe taking like advice on handling his rent.
I just want to point out, I really like my landlord.
You love your landlord?
She's very attentive. We have a very good relationship. So even though I started the episode saying I was anxious, if she is listening to this, I hope she hears that I really enjoy where we live, and I really enjoy our the landlord.
She should factor your consistency into her pricing algorithm.
We've never been. Yes, exactly.
Excellent.
The banking crisis is a crisis of the banking system. This was a banking tremor.
The worries about the large banks is over. They're resilient.
It looks now like we're certainly on the mend.
The last thing the Fed wants to do is suggest that their work is done when it may not yet be done.
Something's got to rebalance here, and it's the Fed rate hikes cooling the economy off.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Back in New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Equity futures on the S&P 500 just about unchanged. Picking up on Monday where we left things on Friday. Looking ahead to more bank earnings tomorrow. Bank of America. And then, Tom, it's on to the likes of Goldman. Then you get regional very quickly through this week. And I think the regional banks will be the big focus after we learned on Friday that these big banks, these major institutions on Wall Street have been a port in a chaotic storm in Q1.
It's a day-by-day tick, and we've got a wonderful story out of Zurich this morning. Again, it's a different story, but in Switzerland, Credit Suisse still sees some flow challenges, and yes, that makes it a very different earnings season, even as you get out to the small caps, those removed from this crisis, and those part of it.
2 data points. I'm not talking about CPI or payrolls. I'm talking about the borrowing data from the Federal Reserve on Thursday and the bank lending data from the Federal Reserve on Friday. Now, Lisa, when you put those two things together, do they signal not an all clear, but some stabilization?
Stability. This is sort of the word that's soothing markets into a feeling of calm, and that's perhaps what's giving a sense of a lift to equities. We shall see. Today we get Charles Schwab, and we get M&T. We get a whole host of other regionals. I'm actually most interested about some of the regionals, given the fact that there still is this concern that big banks are simply cannibalizing the business from the smaller banks, and that's where we're really going to see the big restrictions in lending.
The big conversation, I think, in the world of economics on Wall Street at the moment is whether we can return to focusing on traditional economic indicators and move away from the banking stress of the last month. I think a lot of people in the Federal Reserve might say it's too soon to do so, but Lisa, certainly that's the focus for economists on Wall Street right now.
You know, even before this, hold on a second, even before this, if we were talking about the University of Michigan Sentiment Survey as being the main bellwether, and then after
Fed
that,
expectations
exactly,
too. Yeah.
And how about after the job openings, the JOLTS survey that people had previously debunked as being highly ineffective at really gauging the actual number of openings, because a lot of people post a ton of openings that they don't fill simply to get a whole net of applications. So there's all sorts of questions over what we're actually looking at, what narrative we're forming, and whether it's all post facto anyway.
The point is, it's narratives.
It's been building over the weekend, hasn't it?
I'm just frustrated.
Did you get the feeling, Tom? It's been building over the weekend.
It's been a mess. I'm trying to understand this.
Good morning, Bramo.
Thanks. Good morning to you too. Go ahead, Tom.
She's pounding the table over there. I think that all in all, is Urian Timmer at Fidelity led off with his wonderful note. It's a bifurcated tape. It's a split market, and it's not narrative, John. It's narratives plural. You can really find your 28 flavors of where we are coming out of this pandemic right now.
If you want to get gloomy, we can get gloomy really quickly.
Yeah, exactly.
I can pick up on inflation expectations from you, Mitch, from the NY Fed from last week, Lisa. I'll raise your delinquencies reported by some of the banks, credit card balances being rolled over to another month. Those are the kind of things that people start to do, Lisa, when things start to get a little harder.
Yeah, sure. And then you look at the actual jobless claims and the idea that, yes, they're taking a little bit higher, but people are still employed. And you take a look at earnings, they're not that bad.
I'm going to give this to Business Insider. I can't remember where I saw it. There's no slow time in the Caribbean anymore. All because of the pandemic, everybody started going to the Caribbean in the summer. And you know how you're supposed to get slower hotels, slower airlines?
You mean off-peak?
Off-peak, that's right.
Okay.
See, I don't do it enough, but
sure.
Off-peak is gone. And that's the boom economy.
I like that slow
That's
time.
another, example.
I was wondering when you were going with
economy.
that. Okay.
No, it's a boom economy thing. That's all there is to it.
I'm with you. Equity futures on the S&P 500, just about unchanged. Let me give you a flavour of the price action just quickly. Equity's not doing much, but we'll get a ton of bank earnings through the week. Lisa's going to go through the day ahead, the data, the bank earnings, all of the above in just a moment. Your 10-year yield, 353.37 on a 10-year. Lisa, yield's just a little bit higher.
All right, so today, as far as the economic data, we get 8:30 a.m. Empire Manufacturing Survey, which actually will be really interesting because we'll get the first read on what we've seen in April. The real-time data aspect is going to be important. 10 a.m. we get
at the NAHB housing market index? Do we see home builders starting to get a little more optimistic? Because mortgage rates have gone down. Again, this is sort of the conundrum of if you get a foot off the pedal with respect to restrictions, you end up with perhaps a greater heat in the economy. Today, we've got central banks speak, including ECB President Christine Lagarde at the Council of Foreign Relations, Bank of England Deputy Governor John Cunliffe at Innovative Finance Global Summit, and Richmond Fed President Thomas Barkin. Also, I do want to note, we get M&T, and we get also, we get U.S. Bancorp later on this week. We also get Charles Schwab coming up before market. Schwab was going to be really interesting. How much are they continuing to see outflows at a time when it's not necessarily credibility? This is a question of simply, if you can get 4%, 5% on T-bills, why are you just holding it in cash?
Yeah, not just about return on capital, but also return of capital, which was the story of the stress of the last month or so. Greg Bowd was with us in the studio listening to all of this, wondering whether he should hide under a rock and run away, but he's already there, because Greg Bowd of BNP Paribas has the price tag on the S&P 500, 3,400. So did any of this resonate with you, Greg?
Yeah, I think there's a ton of challenges out there in the market, and I think this idea of a bifurcated market, things moving in different directions, is why we find ourselves with an unchanged market this morning, which is symptomatic of what we've seen over the last week or so. Very low realized volatility environment, but things going on under the surface.
Fed borrowing data, stable last week. Bank lending data on Friday, picking up again. Some positives. Lisa talked about the word stabilization. Is it too early to sound the all clear?
I think maybe. One of the things we saw on Friday, which I thought was incredibly interesting, was we saw some of the first banks report, some of the larger banks, Citi, JP, and we saw positive price action. Typically, when you look at sector trends through earnings season, you see the first names report, the bellwethers, and the whole sector tends to move a bit. What we saw on Friday was the exact opposite of that. We saw some of the banking ETFs, KRE, KBE, that are representative of the broader industry, down on the day with the big names up. And that's the story of relative winners and losers, bifurcation. So I think there's still signs of stress under the surface, and we'll hear much more from some of those smaller mid-sized banks this week.
I'm going to suggest the narrowness of the market is in search of persistent cash flow. If we get all this gloom to occur, do those persistent cash flows break?
I think so. One of the things that we've seen this year is a very narrow rally in terms of what's driven the market. It's been a handful of tech names, growth stocks, that have really provided the index point impetus for the S&P. The question is whether these names are going to continue to trade like bonds, or whether they are actually more cyclical than the market is giving them credit to. And that's one of the things that I think is going to get tested this year.
I mean, and it comes around to big tech and revenue growth. I looked at JP Morgan. This is from Keith Horowitz over at Citigroup, folks, and the revenue build-out of this ginormous company, I think, is not really understood. 116 billion pre-pandemic revenue out to 163 billion, just minting money. In the era that we're in, and quite frankly, the French securities history's expert at this, do you just get almost a monopsonistic move to fewer, stronger companies? Is that where we are out 3 to 5 years?
I think there's definitely a trend at this stage in the cycle for balance sheet and quality to be a theme. I don't know if it's a longer secular theme, but I think when you're at the point when recessionary themes are starting to grow and funding costs are becoming higher, sourcing funding is becoming more challenging, then you certainly get a flight to quality. That tends to be the bigger names in the US.
Let's talk about the smaller names, the regional banks. Just reporting M&T Bank. Lisa, you've been focused on this one. I'll just start with total deposits, which has been a big focus, of course, for the financial industry over the last several months. The first quarter deposits, 159.1 billion at the end of the first quarter, Lisa. That's just a touch lighter than the estimate. What else do you see here?
The fact that provisions for credit losses also were higher than they had expected, $120 million, but not much. The estimate was $118.3 million. That said, they beat when it comes to net interest margin, which came in at 4.04% versus an estimate of 4.03%, basically in line. But you also saw profits actually come in just a touch higher than expected. So does this give you comfort, right? And I guess that's one question, and I'd love to get your thoughts, Greg. At what point do you start getting more optimistic? At what point do you say, okay, this is the all clear?
Well, I think we can get the sense that maybe we have a little bit more comfort. I don't know if optimism is the right word, but the question is how much of this is stress in the banking sector is reflected in the broader market. When we look at where the S&P is trading in terms of the spot level now versus where we were going into the crisis, when we think about it in terms of valuation 18, 19 times 2023 earnings, depending on what number you want to use. There's not a lot of stress for the broader market that's actually priced into the equity market. So, we've had a relief rally off the lows in terms of March. I'm not sure that regional banks themselves finding some stability is enough to really help the market from here.
Okay, so what's a bigger threat to you? The idea of stress in a financial system that, based on these results, might be pressured. I don't know about stressed or a credit crunch or some of these other descriptions, but on the flip side, you have a Federal Reserve that might be willing to go in a little bit more gangbusters with respect to rate hikes if there isn't that credit stress that restricts borrowing.
Yeah, so I think it's these things manifesting elsewhere in the economy. People are always very happy to look at these things as an idiosyncratic ring-fence event. This is something that's really affected these smaller banks and the ways the balance sheet has been managed. Our view is that this is actually symptomatic of such a rapid rate tightening cycle, and we're going to see these things spill out into the real economy, into the credit complex, into the equity world more broadly. A slowdown in the economy that's going to drag earnings down, and it's going to create a more volatile, bearish narrative for equities.
Greg, this was great. As always, to catch up with you, sir. Sticking with that 3,400 on the S&P 500 year-end. Greg Bowdle there of BNP Paribas. Something has to give, seems to be the take for a lot of people, regardless of your view on the equity market. The S&P 500 north of 4,000, at least a CPI with a 5 handle still, and we're pricing in a bunch of rate cuts. Can those three things continue, persist? I think there's a bit of tension at the moment.
And even people on both sides of the debate say that the market's mispricing what that risk is because it's binary, right? We either go into some sort of recession and that really does send inflation lower and crater the economy, or on the flip side, things keep going along, chugging along, and the market's just totally off with this rate cut expectation.
I'm going to go away from the macro. I'm glad you brought up M&T Bank. They're considered to be one of the best banks in the country. Their price to book in 5 years, John, has gone from a peak of 1.80 price to book, phenomenal price to book, to 0.84. I did not know that. That's just absolutely stunning to see a bank of that prestige in these times. And that's where you get these two markets of a huge amount of the market really underperforming.
Yeah, I don't think many people are familiar with that name, Tom, outside of the United States.
That's true.
Historically,
Absolutely.
incredibly well-run financial institution on the East Coast. I think headquartered in Buffalo, right?
Yeah,
Buffalo,
in
New York.
Buffalo,
Yeah.
the ex-Marine Midland and a merger up. And guess what? Mr. Wilmers used to listen to you and me.
Very cool.
He was very supportive.
The stock is positive in the pre-market. Coming up in the next hour, 7 a.m. Eastern time. So about 50 minutes from now, we'll catch up with Binky Chada of Deutsche Bank. Equity futures on the S&P 500 this morning, just about unchanged.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Gunfire and explosion rocked the Sudanese capital for a third day as diplomats intensified efforts to stop clashes between the army and a parliamentary group from escalating into a full-blown civil war. A long-simmering dispute erupted this past weekend into a battle for control of the nation. Nearly 100 people are reported to have been killed. Tensions over China will be as high on the agenda as top-level diplomats from Group of 7 nations meet over the next 2 days in Japan. A senior State Department official says a focus will be on geopolitical challenges in Asia, now that Japan holds the rotating G7 presidency. The meeting comes ahead of President Biden and other leaders going to Hiroshima for the annual Leaders Summit. President Emmanuel Macron has enacted his controversial pension reform after clearing a constitutional hurdle. The move was made possible after France's Constitutional Council approved the core elements of the bill on Friday, despite weeks of protests across the country. The law, which increases the minimum retirement age by 2 years to 64, will take effect in September. Sega has offered to buy Rovio Entertainment in a deal that values the creator of Angry Birds at about 706 million euros. The Finnish company's board has unanimously recommended shareholders accept the offer, which is backed by 49% of shareholders. Japan's Sega is doubling down on console and smartphone gaming as it seeks new ways to grow. And another sign of mounting pressure in the banking industry, Barclays is responding to a slowdown in deal-making and capital markets businesses by cutting about 100 roles in its investment banking group. The London-based lender already let go of roughly 200 positions from the same division in November. Global news powered by more than 2,700 journalists and analysts. I'm Lisa Mateo, and this is Bloomberg.
trillion-dollar industry. There's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
But are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Messer and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
Already saw some tightening of lending standards in the banking system prior to that episode, and there may be some more to come. And that does tend to lead to somewhat greater restriction in credit that could be a substitute for further interest rate hikes that the Fed needs to make.
Janet Yellen, the former Fed chair, sounding like the Fed chair, U.S. Treasury Secretary, speaking with
really well said.
CNN over the weekend. I think verbatim, that was straight out of the book of Chairman Powell and recent communication.
Stop the show. This is really an important observation you made, John, in that I think she's had huge difficulty transferring to the language of a traditional Secretary of Treasury. That may have been what the president wanted, but you are dead on that X number of quarters into this job, she still sounds like a central banker, which is okay. When you're a first-class economist, which everyone agrees, that's what you get.
I was reading through the transcript of that interview, and her outlook hasn't changed too much. I'm not seeing anything at this time that is dramatic enough or significant enough, in my view, to significantly change the outlook. Okay, your equity market on the S&P 500 right now, just about unchanged. Futures not doing much. Yields a little bit higher by a couple of basis points, just north of 350, but not really breaking any levels that we've not seen for a long time. In the FX market, we did do that on euro dollar on Friday's session, north of 110. Negative this morning, down about 1/10 of 1%, 109.75. Just want to get to one single name. Came out about 5 minutes ago. M&T Bank, the stock is positive, Tom, by 1.9%. Lisa went through the numbers, so provisions a little bit higher than expected for credit losses, deposits a little bit lower than expected, but nothing big here, and I think that's what's really come out in the last week or so. Some signs of stabilization elsewhere, encouraging a lot of people. Now, it's early days, and I have to stress it's early days. You will get a lot of regional banks, Tom, reporting later this week.
This is early days. It was, you mentioned before the break, the price to book is cratered off of the joy of 4 or 5 years ago. Their 10-year total return is sub 5% per year. This is one of the better banks, and the return's not acceptable. Imagine what we're going to see from the other banks.
Get Schwab a little bit later on today, Tom, then on to tomorrow. Goldman Sachs, Bank of America, some of the bigger players. Morgan Stanley on Wednesday.
Yeah, Morgan Stanley will be interesting. Srinath Rajan with that article out today on Mr. Saperstein as well. We'll talk about that later. Right now, a brief, and this comes off the IMF World Bank meetings, and thank you to all in Washington that helped us, particularly Peggy Noonan running the ship for us in Washington. Julie Norman joins now, co-director of UCL Center in U.S. Politics. Julie, as a broad stance, what I noticed at the IMF World Bank meetings were the unspoken. Nobody wanted to say China. That word was banned from the meeting. You couldn't say China. But the other thing that was banned was the word allies. Recalibrate for us now the Western allies. How allied are the allies?
Well, Tom, I think you mentioned China as well. And obviously we've seen in the last couple of weeks, and I would say even longer than that, a little bit of wobbling in what alliance means and how different partners approach the question of China in particular. So obviously, we see strong alliances in terms of the stance towards Ukraine. We've seen that with NATO, with European partners. But with an issue like China, it gets a little bit different. There's a lot of different interests at play, as you all well know. And so I think we still see alliances, but at the same time, we see some differences among that as well. And so there's a little bit more caution in using that term when you're talking about some of these more complicated issues.
The bilateralness, or I should say the tension between Washington and Beijing, to me is just too simplistic. who are you watching among our allies to change the dynamic between Washington and Beijing?
Well, I think there's obviously the look to Europe first and foremost. The UK, I would say, has already shifted its policy, notably in the last few years. I think even more so because of China's actions against Hong Kong more than anything else. We started seeing a bit of a tilt in some of the UK policies, continental Europe otherwise. But I'm actually watching some other allies kind of outside of Western Europe, India in particular, states that are kind of in this kind of still allies with the U.S., but a lot of different kind of interests going on that do have a big say and influence in what's happening in the Pacific, in Asia, and in other parts of the world. China, we think of it as bilateral relationship with Washington, but so much of where their power is outside of Europe. It's in Africa, it's in Southern Asia, it's across the world, and so those are the countries I'm looking at.
Well, but Julie, taking a step back, one thing that really emerged from last week's IMF meetings was a sense of not only fragmentation, but an inability to have leadership to address it, to come up with what the framework is in the modern bipolar or multipolar era. Larry Summers, a former Treasury Secretary, on Friday said there's growing acceptance of fragmentation, and maybe even more troubling, I think there's a growing sense that ours may not be the best fragment to be associated with. China gives you an airport, we give you a lecture. How much is that really your sense of what's going on?
Well, I think you said it exactly right there. There's a lot of states that are finding it advantageous to partner with China because they see it as there's not strings attached. There isn't going to be pressure on democracy. There isn't going to be pressure on human rights. It's very transactional. It's very much a business deal. And so that works for, again, a lot of states, and it works very well for China. So I would say in terms of Summers' comments, again, there's a lot at play here. Again, the U.S. is still trading at its highest levels ever with China as well. So it's not like the U.S. is backing away from that, but the U.S. is coupling that again with very strong, arms buildup, with this very strong confrontational stance as well. That other states are hesitant to get onto that for their own interests.
Just getting a couple of headlines. Top diplomats in the G7 meeting over in Japan over the next 2 days. Here are the headlines from one U.S. official. G7 ministers agree on engagement with China, agreed to stay tightly coordinated on Ukraine, and then linking the two issues. G7 cooperation on Ukraine, Tom, leads to unity on China. The latest headlines from a U.S. official as top diplomats meet over in Japan.
Seem to be massaged. I mean, it's exactly, I think it's exactly what you'd expect to see. What's important there is it's not a G8. Russia used to be in the club, and Russia's not in the club anymore.
Well, also, they've got to massage some of the issues of the last week. We keep returning to those comments, Tom, from the French leader a couple of weekends ago.
Oh, yeah. There is
some massaging to do, is it fair to say?
Question.
Just ignoring. I mean, that's what happened with European officials. Just like, la, 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 we're totally united. That's
what I got from the IMF World Bank meetings, too. Lisa, I'm so pleased you went there. Didn't you get that feeling as well? Just sort of hoping those comments didn't happen, pretending they didn't happen?
Totally.
I mean, you guys, I had to leave late because of this wonderful panel I did at the IMF. And, of course, I stopped up on U Street at Ben's Chili Bowl. And I can tell you from reporting, they're still called French fries.
Is that the latest?
The latest. They didn't take.
The diplomatic spat hasn't gone that far.
They didn't change. It's still French fries. Why don't you continue?
I plan to. Julie, I wanted to bring that up. When you listen to US and European officials, they're almost pretending this tension between the two does not exist. Julie, how much tension is there right now over trade, over big foreign policy issues?
Yeah, I mean, obviously there are tensions. I would say I don't want to overstate them either. I mean, right now the most immediate issue is Ukraine. And I think the U.S., France, and other NATO countries are, that is where the alliance needs to stay tight, and it has stayed tight. China has always been complicated. There has been a difference between European and U.S. approaches to China for some years now, so this isn't really taking anyone by surprise. And even Macron's comments, I think, are a bit more, probably shared by some others, even though people are pretty quick to critique him. But I think a lot of European states, as well as, again, other states on the periphery, are just realistic about the fact that China's going to take a little bit of a more nuanced kind of approach from many states where their interests are very intertwined there. And that's just a reality.
Julie, thanks for the perspective and the reality check, as always. Julie Norman there of the UCL Center on U.S. Politics. Just to recap some of those headlines from a U.S. official following meetings that will continue over in Japan between top diplomats in the G7. Lisa, G7 ministers agree on engagement with China, agreed to stay tightly coordinated on Ukraine. They link the two issues. Cooperation on Ukraine leads to unity on China.
These platitudes really don't give justice to what's going on under the surface and the tensions that people are not talking about. What I got from last week's meetings was that somebody in the room needs to talk about the tensions, needs to hash it out, and needs to have some sort of leadership, because otherwise you're going to have the fragmentation under a mantle of unity that will eventually end up with incredibly a broken kind of system. We talk about Emmanuel Macron as being an outlier. He is not. He represents, frankly, what we're hearing from every single business executive that has a major business in China, whether it's Apple or whether it's Mercedes-Benz. And this really is one of the ultimate questions.
I think someone wrote in Barron's over the weekend that Macron was tied to Arnaud by an MS scarf, and both were in the same situation with regards to China.
It's the same story. This is a corporate interest.
Didn't you say that they need marriage therapy? Wasn't that your line last week?
Whatever. Yeah, it's like you need
These
to hash
officials
out.
needed marriage
Well,
therapy.
they need to really work out the tensions under the room. Otherwise, it's just going to be a massive fissure.
There's marriage therapy. Thank you for that.
What's the best investment advice you've ever been given by anybody? The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes. Or yes. Not keeping, look, people have conviction, or they invest for if they invest for the right reasons, just keep at it.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
live from New York City. Welcome back to work. Welcome to the program. This is Bloomberg Surveillance. Equity futures look a little something like this on the S&P 500. Futures positive by 0.05%. The S&P up last week by about 0.8%, squeezing out a week of gains. On the Nasdaq, pretty much unchanged last week and pretty much unchanged this morning. We're down by not even 0.1% on the Nasdaq 100. In the bond market, what a close to last week. Governor Waller closing out the Fed speak sounding exceptionally hawkish. Yields up. Yields higher again this morning by 4 basis points, 4.1393 on a 2-year this morning, up a couple of basis points on a 10-year, Tom, to 353.18.
In 2-10 spreads, you got to make note of this, 61 basis points. We're not going to do technicals here on a Monday, but the answer is, whatever the trend is, you're either near support or resistance. In this case, the 2-10 spread, John, is really buttressed up against support where it could break through to a greater inversion.
Let's talk about a level we did break on Friday. Euro dollar, a new intraday high for the year. On Friday, your intraday high for the year is now 110.76. This morning, 109.81 on euro dollar, down about 0.1% on that currency pair. Jordan Rochester over at Nomura, long the euro and writing the following. Most of our forward-looking indicators suggest a high euro dollar ahead. We remain comfortable holding with the view that euro in Q2 will likely achieve new highs for the year, with 111 towards 114 in prospect. This is why we raise our conviction to 4 out of 5 in long euro dollar. So over at Nomura, Tom, you're familiar with this, but they have their calls on a range of currency pairs, and then they give you a conviction rating out of 5. This one's 4 out of 5, long euro.
Yeah, it's interesting to see. Joining us now, Jordan Rochester, G10 FX strategist at Nomura for a morning brief for Global Wall Street. Jordan, what I find interesting is if I triangulate and go to euro-yen, I've got euro-yen buttressed up against resistance at a 147. It's unimaginable strong euro, weak yen. On the U.S. dollar pair, is it about strong euro, or is in the zeitgeist this weekend, is it about weak dollar?
Been a bit of both, Tom. I mean, I think in the past few weeks, it's been the dollar side that has really moved the needle for euro dollar. With the banking situation, SVB's collapse, it's allowed markets to price in the idea of Fed cuts. And a lot of people would argue too many Fed cuts are priced in. The irony is there are these cuts priced in, and I don't see anyone arguing for them to be priced in that way. So there is a bit of a dislocation between narratives and actual market pricing. But Tom, I think the good news for euro isn't over. I think the growth pickup that we've seen in the first quarter of this year should carry on into the second quarter. That should keep the ECB in a more hawkish footing. The market is pricing very much a too low terminal rate in our view for the ECB. So we look for 4.25% by July. The market's somewhere around 3.6. Now for the Fed, they could do a rate hike of 25 basis points in May. Our economics team thinks they won't. They think they are done with this rate hiking cycle after the banking situation. But the market's pricing 21 basis points or so for that meeting. So if the Fed do go ahead and do a 25, I don't see much upside for the dollar from that rate hike. Where with the ECB, the market's not pricing the 50 basis points that we expect to see from them the next meeting. So from a monetary policy point of view and from a growth point of view, there's more upside, 114 in euro in the next 3 months.
Jordan, you sound like Christine Lagarde, optimistic, over the weekend speaking to CBS. Now, Jordan, I just wonder if there's anything to be optimistic about. Is this 425 on rates of the ECB because growth can handle it, or growth is really outperforming?
Well, last year was pretty doom and gloom. One of the best trades we had was just being short eurodollar, short cable from pretty much January, February time onwards, especially when Ukraine was invaded by Russia. This year, it has been super different. It's been all of those negatives of last year turned around from headwinds into tailwinds. So last year was about very high energy prices weighing on the consumer, weighing on the government spending situation as well as corporates. Now energy prices have pretty much collapsed in terms of natural gas. They've gone below where they were before Ukraine was invaded too. This is a huge sort of disposable income boost for consumers and for firms as well, reducing their costs. So that from that side of things, the terms of trade for euro would put euro dollar between 115 and 120. Massive good news. But for the euro area and the monetary policy side, we've got all the inflation from last year feeding through to second round effects. very tight labor market. We're seeing wage hikes coming through. We're seeing strike action in France as well. These sort of stories in the labor market will keep the ECB in a hawkish setting until it becomes very clear that inflation is going towards 2%. Where in the US, the Fed's more of a dovish setting now because the banking crisis has seen credit conditions tighten for firms, and we're already seeing the forward-looking indicators suggest that disinflation pressures are on the way. And last week's CPI, not coming in too hot, allows the market to carry on looking at those forward-looking signals of inflation. Because, John, the key difference for me is that the Fed is perhaps going to turn from looking just at realized inflation to maybe considering forecasts of inflation when it comes to their policy settings. The ECB, they're not yet at that stage. They're a few months behind. That's why we think they'll keep raising rates through to July.
So this is a conversation about the cycle. Now, Jordan, you know how this works. Euro-dollar goes from parity to 110. You get a 10% move, and you see those doom and gloom articles about the end of the US dollar circulating everywhere. Can we talk about the structural shifts that you're expecting from the greenback, Jordan, and whether you subscribe to this theory that you are going to see this structural shift away from the US dollar?
The digitalization of trade is helping, for example, China's role in SWIFT payments increase. The actual choice of currency in the past was tied to ease of use, and that was one of the factors behind it. And now there's an ease of use of just using any currency. So there is a structural tailwind for alternatives to the dollar. But there's also when there's a crisis, you need dollars. That's still going to be the case for a quite long time. Trusting those other currencies to hold their value will be difficult in times of stress, especially if it was a Eurozone-related crisis or if it was elsewhere in EM that we had an alternative crisis. High levels of inflation in that other choice of currency would erode the value of that. So it's not a perfect world for alternatives for the dollar when it comes to global trade, when it comes to just getting things, cross-border payments done. So, John, in essence, there are definitely shifting tides, helping alternatives to become more of an option. But I do think that the dollar is going to remain the majority reserve currency for probably the rest of our lifetimes.
Jordan, I want to go back to something that you said, which is the banking crisis in the U.S. will keep lending conditions tighter, which will really cap how far the Fed can raise rates, and talking about how that could potentially pressure the dollar, even if it's not a long-term kind of structural shift, as you were just talking about with John. Let's say there is no banking crisis. The M&T results that we got this morning seem to suggest that it's not really a problem, that all of a sudden, do you start to price in more Fed rate hikes, and you end up with perhaps a stronger dollar than you'd otherwise assume?
The biggest risk to the trade we have, Lisa. That's it. That is the biggest risk. If the banking data massively improves, all of the doom and gloom goes away. And let's say it's followed by an inflation print or two that comes in hot. Let's say shelter doesn't cool down. Let's say goods prices rebound. Then absolutely the dollar strengthens in that scenario. The H8 data, this gets released every week. The update from Friday showed that actually we didn't have consumer credit tighten as much as the previous 2 weeks. So we'll have to keep an eye on that data. If it massively rebounds, which would be completely shocking and weird, but if it was to do that, then you could definitely see the Fed carry on hiking, perhaps not at the 50 basis points clips that we saw last year. Maybe it's just the 25s until something else breaks, because it seems that when you get to these levels of rates, something does break. We've seen it already in the banking sector. The question will be what else? Is it commercial real estate and or other factors to consider? So yes, that is the biggest risk to the trade. Oil prices is the other one. So if oil rebounds, gets to $90, $100 a barrel, inflation rebounds, and therefore the Fed continues to remain hawkish. So yes, rebound in banking data and energy prices, two main risks to this long euro-dollar view.
Which also raises this issue of positioning, right, and how fragile positioning is at a time of great uncertainty. We've seen incredible whipsaws in benchmark rates, which should be a ballast for markets of stability. How tenuous is positioning that could create some really big moves in currencies, in currency pairs, given some of these